Yeah, hello, good morning, everyone. Sir, good morning. Yeah, Manohar, sir, will you cover all chapters as well as possible? I will complete all concepts today itself, ma. Forex market with MCQ, without MCQ. Yeah, Bal Subramanian, good morning. Manikandan, good morning. Karthik, good morning, man. Yeah, it will keep in YouTube only, ma. Good morning, Mohan Sai. Okay. Pankaj, good morning. Manan, in future there will be MC. Yeah, yes. Within few days, I will upload MCQ video itself, ma. Don't worry about the MCQs. Next, any other queries, ma? To access the important questions, we need to purchase the Shikra material, sir. I have purchased your BCCU, so you subject. Okay, Bal Subramaniam, after completion of this session, we will provide e-books with nominal prices for view purpose. Yamuna Sri, good morning. Harish, yeah, case studies also I will cover today itself, ma. Okay, then fine. Yeah, yeah, Manikandan, let me start, ma. So, okay, guys. So, yesterday I uploaded a ABC analysis and exam pattern. Based on that only, so we want to rock today's session. Just a few days back, your batch and your way of teaching is extremely good. Thank you, Momin. So, okay, then fine. When it come to ABC analysis, so first in this session, I will cover problematic portion. Later, I will cover theoretical portion. Then I will cover case studies. So this is the agenda for today. So at any cost, I will finish all A category, B category concepts. Practical questions, theoretical questions, and case study based questions. Okay, without late, there is a no more introduction. So we want to start with the concept. The first concept, DuPont analysis. DuPont analysis. Okay, when it come to. So as usual, you know, in chapter 2, we will get two questions. one problematic question, one theory question. For problematic purpose, we need to learn DuPont analysis and Rona analysis. There is not much more problems in Rona. So, but importance point of view as well as problematic point of view, DuPont analysis is only the best, and we have a problems also. Okay, then fine. Sir, what is about DuPont analysis? It's a simple. Generally, DuPont analysis is not a concept. It's a company name. It's a company name. So DuPont Inc. is a company name. Generally, as per our FM knowledge, we are calculating return on equity. We are calculating return on equity. When it comes to return on equity, simple, return divided by equity capital. Return divided by equity capital. When it comes to return divided by equity capital. When it comes to here, it gives single solution. Single solution. Sir, what is a single solution means? Simple. So the meaning of the return divided by capital employed, how much equity capital I used in the company, based on that how much profits I generated. That's a concept set by return on equity as per FM. But when it comes to this DuPont company analyzed, don't calculate in single format return divided by capital employed. By this calculation, you have to use 3/4 model and a 5/4 model. 3/4 model and a 5/4 model. So why? Because if you calculate like this directly, return divided by capital employed, it shows only one solution. But if you use 3/4 model, based on the 3/4, you can assess three elements in your organization. One is operating efficiency, another one asset utilization, another one risk or leverage. Are you guys clear? For the purpose only, the calculation pattern they changed into 3 parts and 5 parts. That is the concept of DuPont analysis. Now see here. So DuPont analysis is a financial performance framework used to break down company's return on equity. Breakdown for the purpose of knowing some more thing, comparing to just a single solution into several components to understand underlying drivers of profitability. It was developed by DuPont Corporation in 1920. Now when it comes to generally if you use 3/4 model or 5/4 model or basic version, you will get same answer only. But the only beauty differentiating the DuPont analysis direct calculation and element calculation is assessment of profitability with help of 3 factors, with help of 5 factors. Now, so when it comes to the calculation point of view, all models give same solution only. So this is the direct calculation of return on equity. When it comes to the 3-component model, now under 3-component model, operating efficiency we will calculate, asset efficiency we will calculate, financial leverage we will calculate. The combine of operating efficiency and asset utilization and financial leverage is known as return on equity. Are you guys clear? Now the split of operating efficiency. What is the purpose of operating efficiency? To know the company's efficiency regarding to the profit. So I know the purpose is find out in the operating efficiency. The calculation is net profit divided by sales. Net profit divided by sales. Here sometimes they will use PAT. Profit after tax is nothing but net profit. Okay. Next, when it comes to asset utilization. So asset utilization, for the purpose of knowing the asset utilization, you have to use a concept name called asset turnover ratio. Sales divided by total assets. When it comes to know the financial leverage of the company, so we are using a concept name called equity multiplier. The calculation is total assets divided by equity. Now the combo of these 3 elements is known as return on equity. Return on equity. See. So ultimately what happens? Sales get cancelled, total asset get cancelled. you will get net profit divided by equity only, basic formula only. But if you observe individually, it shows operating efficiency, it shows asset utilization, it shows leverage. One formula, three birds. That's the policy followed by DuPont INC. Hope you guys clear. Next, there is a concept name called 5-component model. This is newly introduced in your new syllabus. Here, instead of three elements, they consider 5 elements to know the organization performance. So, financial leverage, asset utilization, common. Now, for operating efficiency purpose, they split it into 3. So, one is profitability, another one is interest burden, another one is tax burden. By combo of these 3, you will get operating efficiency, and operating efficiency plus asset utilization plus leverage is known as return on equity. That is a 5-force model. Now see, operational efficiency, interest burden on profit, tax burden on earnings, and asset use efficiency, and equity multiplier. Equity multiplier. Now, when it comes to how to check operating efficiency, so PAT is nothing but net profit. EBIT is nothing but operating profit. EBIT is nothing but operating profit. How to check the operational efficiency means operating profit divided by sales. Operating profit divided by sales. Next, when it comes to interest burden, EBT divided by EBIT. Next, when it comes to the tax burden, EAT divided by EBT. Asset use efficiency, we already know, sales divided by total assets. Equity multiplier, total assets divided by equity. Now, when it comes to return on equity means operating efficiency or operating margin calculation, interest burden, tax burden, asset turnover ratio, equity multiplier. Here also ultimately you will get EAT divided by equity. That is nothing but net profit divided by equity, basic formula. But with help of this individual calculation, I can assess company's operational efficiency. With help of this, I can assess interest burden in the company. With help of this, I can assess tax burden in the company. With help of this, I can assess asset utilization. With help of this, I can assess leverage. One formula, 5 concepts. That is called 5-force model. So, okay, then fine. Without late, I want to start calculation part. I hope you understand. This is not a regular class or EO class to explain details of the formula. So just I am giving each and everything overview only. Next, when it come to open your workbook, ma. So do point analysis. Problem number 2. When it come to problem number 2, Yes Limited is planning to take over the business of K LLP. For the purpose, they appoint Mr. D, a professional accountant, to analyze the profitability of K LLP for the period ended 31st March 2021. The following balances are extracted from statement of profit and loss and balance sheet of K LLP for the year ended 31st March 2021 and presented to Mr. D for analysis. Sales is given, depreciation is given, interest expenses is given, tax expenses is given, net income is given, current assets is given. So the word net income represent profit after tax. Profit after tax. So alternative names are very, very important. So when it comes to EBIT is known as operating profit or business profit. Next, EBT is known as taxable profit. EAT or PAT is known as net profit or net income. Net profit or net income. Okay, then fine. Current assets is given, fixed assets is given, total assets is given, current liability, long-term debt, shareholders' equity, and total liability and shareholders' equity. Balance sheet totals. Balance sheet totals. Okay, then fine. Check the requirement. Mr. D began the profitability analysis with a calculation of traditional financial ratio of return on equity. For the purpose, he assumed that there is a no preference dividend as so much data is presented to him. So because of the word no preference dividend, they're saying to us profit after tax minus preference dividend equals to EAESH. Now if there is a no preference dividend means PAT is nothing but EAESH. If you want to calculate return on equity directly, EAESH divided by equity. EAESH divided by equity. Because of there is a no preference dividend, PAT is nothing but EAESH. PAT is nothing but net income. Hope you guys clear. Now, when it come to see return on equity equals to EAESH 1650 divided by equity 4100. Now the answer 40.24%. 40.24%. Okay, then cool. But this is a not right way to express under DuPont analysis. Why? Because in DuPont analysis it is not a single answer, it is a component of different answers, shows a different performances. That's why for this question we have to use a 3-force model and a 5-force model. 3-force model and 5-force model. Okay, then fine. There is a no clarity in the question which model you have to use. At that time go with the 3-force as well as 5-force, no issue. Okay, now so how to calculate return on equity as per 5-force model ma? 5-force model. Return on equity equals to operating efficiency EBAT divided by sales, interest burden EBT divided by EBIT, tax burden EAT divided by EBT, asset utilization sales divided by total assets into leverage equity total assets divided by equity. This is a way to calculate. Now you have to figure out each and every element. So I know PAT, EBIT, interest, EBT, tax, EAT. Now this income statement is mandatory. So first we know EAT, that is nothing but PAT. How much more? 1650. 1650. For that 1650 we have to add tax. Why? Because we are doing a reverse calculation. So tax expenses given in the question, I think 900 rupees. So 1650 plus 900, you will get EBT. Now the EBT equals to, so EBT equals to how much more? Tell me ma. 900 plus 1650. 2,550. Next, when it come to interest expenses, they given in the question paper 20. Now add 20 to this, you will get EB80. Now the EB80 equal to 2570. So these are the values we needed to calculate 5 forces model. Now substitute in this 2570 divided by sales given in the question paper itself. Sales equal to 7,100. 7,100 into EBT 2550 divided by EB80 2570 into EAT 1650 divided by EBT 2550 into sales 7,100 divided by total assets. Now where is the total assets? 7250 into 7250 divided by equity 4,100. If you solve this, you will get an answer of 0.36, 0.99, 0.64, 0.97, 1.7. 1.7. So multiplying this all is known as return on equity. Now when it come to this 0.36 expresses profitability. So the company have a decent profits. Company have a decent profits. Why? Because if I put 100 rupees, and then 100 rupees I am generating 36 rupees. That is an indication of 36, 0.36 or 36%. Next, when it comes to, you can observe this B, it is talks about interest burden. Now the 0.99 shows out of 100 rupees of EB80, the EBT covers 99 rupees. 99 rupees. That 1 rupee is known as interest. That is called nominal. So there is a no interest burden. That is not a significant interest burden. There is a just a minimal interest burden expresses by this second formula. Next, when come to the C, you can observe out of 100 rupees of EBT, EAT covers 64 rupees. EAT covers 64 rupees. Now the 40 rupees, the pending balance is known as tax. The pending balance is known as tax. This is a way to show tax burden. Yes, there is a tax burden to the company of 30 rupees, 30 change or 40 rupees. Now when it comes to the sales, so it shows I am investing 100 rupees on invest. By using that 100 rupees, how much sales I generated. More than 100 rupees or less than 100 rupees is the point. Now you can observe the 0.97 shows I invested 100 rupees, but even I am not recovering that 100 rupees from the asset. Underutilization. Next, when it come to here, so it shows one more than one. So for every 1 rupee of equity, the extra shows the debt portion. Now, when it comes to 1 rupee is equity, extra 1 rupee is known as debt. Company relying on equity also. Company here relying on equity plus debt, but the major relying on equity. Why? Because 1.7. For example, the answer is 2.5 something. Out of 2.5, 1 rupee relating to equity, 1.5 relating to debt. Here we have to use a sentence called company fully depends on the debt. Company fully depends on the debt. But when come to here, so company depends upon the debt and equity, but the major portion is equity. So that kind of sentences you have to write in the exam for each and every calculation. You can observe for every point they expressed their opinion. So expression of opinion is very, very important for exam. So when it comes to the exam presentation, first you have to write the concept of DuPont analysis like this. First you have to write down the this definition. After the definition, write down the calculation part based on 3-component model and a 5-component model, or if they ask especially 3-component, just write the 3-component. If they ask a 5-component, write 5-component, or they are not asked Take an assumption of both. Okay, after writing the definition and the formulas, then start the analysis. Analysis is nothing but calculation. What we did is known as analysis. After analysis, you have to give a comment. That is the point of discussion. We discussed about each and everything. Are you guys clear? First, you have to write properly the entire theory of DuPont analysis and calculation. Then you have to put in a name called analysis, solve the calculation, what they given information, and next you have to do the comments. This is the exam presentation regarding to the DuPont analysis. Okay, next. Illustration number 4. Illustration number 4. So this entire stuff is relating to they're facing performance issues in their organization. For the purpose of knowing the performances, you have to calculate return on equity. If you calculate return on equity directly, you can't assess the performances, you can't get a solution for the issue. That's why use the DuPont analysis. With help of the DuPont analysis, you will get a 3 different answers regarding to the 3 different elements. It shows a 3 different performances explanation. So, and also you can observe requirement. Carry out the DuPont analysis considering the financial parameters given below and show how the return on equity of the company of MT Limited is changing due to change in its margins, asset utilization, leverage over the period of 4 years. So they are only asking about 3 component model. Margin represent profitability measure, and asset utilization measure, and leverage is nothing but equity multiplier measure. Now, case B, give your comment on the trend of the set parameter. The word trend represent, you have to compare 2019 and 2020, 2021 and 21-22. If you compare like this, you will get a trend analysis, what happening. Are you okay? Now, sales is given, profit before tax, PBT is given, PAT is given. This is called net income or net profit. So dividend is there, tax on dividend is there, retained earning is there. Now they given balance sheet extract. So total assets is needed for us. Why? Because equity multiplier is nothing but what, ma? Equity multiplier. Total assets divided by equity, right? Okay, then fine. When it comes to the equity, share capital plus reserves and surplus is known as equity, ma. Don't consider only equity share capital. The word equity represent equity share capital plus reserves and surpluses. Reserves and surpluses. Okay. So see, same what I said, they presented. This is suggested answer solution. Next, first, when it come to which model it is, we have to decide. So it is a model of 3 component. Return on equity as per 3 component model. Profitability measure, that is nothing but net profit or PAT divided by sales into asset utilization. So sales divided by total assets. Next, equity multiplier, total assets divided by equity. Procure net profit information, sales information, total assets information, equity information. Problem will be over. Now here is a point you have to understand. PAT is nothing but net profit. PAT is nothing but net profit. Yes, sales is there, PAT is there, total assets is there, and equity is there. Now see, PAT divided by sales, net sales divided by total assets, and the total assets divided by equity. Now the equity represent equity share capital plus reserves and surpluses. Reserves and surpluses. If you do this, you will get profitability measure answer 18.93%. Asset turnover ratio 0.937, equity multiplier 1.031. Now multiplying of these 3, you will get return on equity, that is nothing but 18.287%. So this is about 2019, this is about 2020, this is about 2021, this is about 2022. Now you can observe what happened in 2019, 18.2%, here 14%, 14%, 16%. When comparing to these 2 years, return on equity decreases. The reason for decreases is individually profit decreases, asset utilization underutilized, and we are focusing on debt. We are focusing on debt. Due to that three reasons, return on equity decreases. That's the points you have to write. When it comes to, so there is a minimal changes in 2020 and 2021. When it comes to here, there is a return on equity increases trend. The reason for increases, profit is increases, asset underutilized only, and you can observe debt portion also increases. Risk increases, leverage, risk increases, underutilized, even though that the profitability is what happened, increases. Because of these two negativities, it overcomes. It overcomes. That kind of points you have to mention clearly. You can observe in the comments. Are you guys clear? Next. When it comes to illustration number 5. So what are the points we discussed? Revise mandatorily. Why? Because that are the exam standard points and the exam related points. Now when come to the illustration number 5, about river limiter are provided below. Revenues is given, assets is given, equity multiplier is given, even return on equity also they given directly. And comment on the changes in profit margin, asset efficiency, leverage, return on assets. Now return on equity, that is a point. Return on assets is nothing but profit divided by net assets or total assets. Profit divided by total assets, or you can also write like this. Why? Because here no ratio is not considered as a single. You have to consider 3 or more ratios for knowing the performances. When it comes to asset turnover ratio, profitability into asset turnover ratio. Now the profitability is net profit divided by sales into sales divided by total assets. Sales get cancelled, net profit divided by total assets. That is a formula. Profit divided by total assets. Now this is a question taken from the workbook. So what you have to focus means, here they're just asking about theoretical knowledge and the practical. It's practically how their change impacted. So you can observe first they're taken all values. After that they calculated profit margin, asset efficiency, leverage, and return on assets. So sales, increasing revenue, assets, increasing in assets, equity multiplier, that is nothing but risk factor. So 1.33 to 1.2, it means they are reducing the debt portion. So leverage decreases, debt decreases, risk also decreases. Next, return on equity decreases, profitability of equity decreases. Next, assets turnover ratio 2.4 to 2.8. So generally asset turnover ratio increases means we are using effectively, asset efficiency increases. Next, return on asset. So return on assets also increases. Why? Because we are using assets effectively. If we are not using assets effectively, this return on assets will be decreases. Profit margin decreases. The profit margin decreases because of revenue decreases. Because of revenue decreases, company profitability also decreases. That are the points you have to mention. So it's not difficult, but when it comes to the exam, so student will answer only for this. They will miss this information of sales, assets. So you have to consider entire things. Next, problem number 6. Problem number 6. When it comes to the problem number 6, the following financial extract are provided from the accounts of L Limited. You are required to calculate return on assets with the help of asset turnover ratio and return on equity with the help of equity multiplier under DuPont analysis, and compare the performance of the company over the years in terms of amount and in terms of ratios. So net income is given, profit, revenue is given, assets is given, equity is given. Okay, based on this you have to figure out return on assets as well as return on equity. See here, so DuPont analysis, net profit ratio, asset turnover ratio, return on assets. Now the combo of this, you will get return on equity also. So return on assets you have to calculate return on assets, and a return on equity also you have to calculate. Now when it come to, so I said already the logic behind this. Profitability measure into asset turnover ratio. Profitability measure net income divided by sales, sales divided by total assets. Now the combinedly known as return on equity. That's the logic they use. Return on equity into equity multiplier. Now you can also observe they commented what happening, increasing or decreasing. Apart from the KCA of DuPont analysis calculation, you have to answer case B, case C, case D related questions. When it comes to the case B, if the PE ratio is low, earning yield is high, do you think the signals future earnings to grow? Explain. So they're saying that if PE ratio is low, earning yield expectation is high, do you think signal for future earnings? No. This low PE ratio indicates undervalue or undervaluation. So due to that undervaluation, market price valuation will be impact, not the future earnings will impact. Are you guys clear? What will impact ma? Valuation will be impact, market price will be impact, not earnings. Next, case B. When the PE ratio is high, do you expect the higher forward PE ratio? No. So why? Because the PE ratio high represent it's a overvalued. Overvalue of the market. It expresses for 1 rupee of earning how market price is affected. It's not talks about the higher forward PE ratio in the future. Next, explain the whether and what way residual earnings and abnormal growth are relevant to the evaluation of PB ratio and PE ratio. Now the point they expresses residual earnings. The word residual earnings is nothing but EBIT minus cost of capital. EBIT minus cost of capital into capital employed. So abnormal growth is not depends upon the earnings. So abnormal growth is not depends upon the earnings. So that's why here also we know there is the answer. So this is the answers for this question. You can observe. So no low PE ratio signifies that market price is low related to the accounted earnings. Future earnings or expectation of the market is reflected on the market price, not on the earnings. Now relatively low market price is not an indicate of expected growth in the future. Next, high PE ratio nothing but overvaluation. So the answer is no. When PE ratio is high, signifies higher earning expectation in the future forward PE ratio is computed by dividing the current market price by the future expected earning per share. It not talks about the future forward PE ratio. If the future expected EPS is higher, the forward PE ratio must be fall below the current PE ratio. If future forward PE ratio need to be higher, first you have to check the expected EPS, that must be fall below the current PE ratio. Now they provided residual earning related and abnormal growth related. You can read it, no issue. Next, problem number 10. Problem number 10. So another important model, same concept and the same problem is there in your SCM. So same problem and same model is there in your SCM, strategic cost management. So for this you have to learn a little bit of theory. Yeah. Types of quality cost. Types of quality cost concept you must need to learn for solving that kind of problems. There is a two types of cost: quality control cost and quality failure cost. Under quality control cost, it classified again to prevention cost, appraisal cost. For quality failure, they're again classified into two types: internal failure cost and external failure cost. Now, here is a point: list of customer. So what are the cost elements included in prevention cost and appraisal cost? What are the elements included in internal failure cost and external failure cost? Based on that only, that problem need to calculate. Now the prevention cost means cost to scrap defects before they occur. Example: training cost, quality planning. So these are the examples for prevention cost. Before failure happens, what are the cost you are incurred is known as prevention cost. Appraisal cost: for checking of the defective purpose, if you incur anything, that is called appraisal cost. So examples are testing, inspections. Next, internal failure cost: before reaching to the customer, if cost any incurred for the purpose of failure, that is nothing but internal failure. So before reaching to the customer, after reaching to the customer, if any cost incurred regarding to the product, that is called external failure cost. Now, found before reaching the customer, found after reaching the customer. Example: rework, scrap is an example for internal failure. Warranty claims, lost of trust is an example for external failure cost. So if you know this, you can easily answer that kind of questions. Now see, so first, sale is not a cost. Scrap, internal failure cost. Rework, internal failure cost. Production inspection, inspection is appraisal cost. And next, production warranty, warranties is external failure cost. And next, quality training, training is an example for prevention cost. Material inspection, so inspection is an example of appraisal cost. So if you know this, problem is over. Now see what they're asking: determine the cost of prevention and its percentage to sales. So find out the prevention cost. Prevention cost is only one is there, 37.5 in rupees, 37.5. They're asking percentage to sales also. 37.5 into sale of 3000 into 100, you will get percentage. So when it comes to the year 2020, 75 divided by 3000 into 100, you will get a second year. Now see, 37.5. So percentage equals to 37.5 divided by sales, how much? 3000 into 100, that is nothing but 1.25%. So same for second year also, 2.5%. So what happened? 1.5% to 2.5% increases. So quality training is increases. Due to that quality training, we can reduce the defectives. Next, appraisal cost. So I think list is there. Appraisal cost, two things is there: production inspection and material inspection. 140, you will get total 140. Now 140 divided by sales. 140 divided by sales of 3000 into 100, you will get 4.67%. Next, determine the cost of internal failure and its percentage to the sales. Internal failure, two things is there: scrap and rework. 300, 250. 300, 250, the total is 550. Divided by 3000 into 100, 18.33%. External failure cost, only one is there, that is called product warranty. So 5%. Now the total quality cost equals to appraisal cost, prevention cost, internal failure cost, external failure cost. So determine the cost of external failure and its percentage to sales and the total quality cost. Hope you guys clear. Any doubt on this? Now you can observe they commented regarding to the answer. So previously the quality control cost is 29.25% of the sales. Now the only quality cost is 21.67% of the sales. So quality point of view we improved. So how much we improved means 7.58%. 7.58% quality point of view we improved. We reduced the quality control cost. If you reduces quality, so improved means we are providing a quality services only now. So because of this 7.58% of decreasing, my profit what happened ma? So if I am this cost I am not incurred means that is a cost reflected in profit. So sales into 3000 sales into profit of 7.58%, 227.4 lakh rupee I can save due to quality. This is the purpose of quality control cost calculation. So this is about chapter 2 related problems. This is about chapter 2 related problems ma. Next. Next we are entering into third chapter. When it comes to the third chapter, when it comes to the third chapter, from this third chapter we will get 7 marks problem. For the purpose of 7 marks problem, we have to put time for this concept name called profit maximization under different market structure. Are you guys clear? Now, this is all about MCQs related theory content ma, foundation economics. So if you have a sound knowledge regarding to this, you can easily answer 2 MCQs. So don't neglect at the time of preparing MCQs, check these concepts also. Yeah. So when it come to problematic point of view, there is a concept of maxima and minima. Maxima minima problematic concept and shutdown point related. And next, monopoly market. The next, monopoly market and constraint optimization. Constraint optimization. Now when it come to in old syllabus, their maximum uses the concept name called maxima minima in old syllabus. But when it come to the new syllabus, all attempts they are focusing on this concept only. That is called monopoly market related. Monopoly market related. So here there is a concept of sub-markets concept is there. So I will give clarity. Just come now. If you need to answer the question maxima minima, first you have to understand the theory of cost concept. If you don't know about this theory of cost concept, you can't answer ma. Now see, so theory of cost expresses the concept of rational producer. The word rational producer represent maximum output for minimum cost we spent. Now there is a classification of cost or types of cost is there. Now total point of view, total variable cost, total fixed cost, total cost, semi variable cost. And average point of view, average variable cost, average fixed cost, average cost, or is also be known as average total cost, and marginal cost. So here this average point of view are very important for us. Are you okay? Now I hope you already know total variable cost means cost which are vary with change in level of output. That cost is known as a variable cost. Next, total fixed cost. The cost not vary with the change in level of output. Output increase or decrease, cost remains constant. That cost is known as total fixed cost. That is sufficient. Next, when it comes to the total cost, summation of variable cost plus fixed cost is known as total cost. Next, semi-variable cost means you know the cost included both variable nature cost and fixed nature cost. The combining of the two is known as semi-variable. Now the topic is started. Average variable cost. The word average variable cost represent per unit variable cost. That is nothing but total variable cost divided by quantity. Total variable cost divided by quantity. Next, average fixed cost. It also talks about per unit fixed cost. Total fixed cost divided by quantity. Total fixed cost divided by quantity. Next, average total cost. It expresses per unit total cost. That is nothing but total cost divided by total output. You will get per unit cost. Now that per unit cost is nothing but average total cost or average cost. Marginal cost. The word marginal cost represent additional cost for producing of extra one output. How much I spent at extra is known as a marginal cost. The extra cost is known as marginal cost. Additional cost per unit. Hope you guys clear. Now this is the calculations. Total cost at new unit and the total cost at old unit. You will get the gap of extra unit, that is called marginal cost calculation. And average cost calculation, total cost divided by total output, or per unit variable cost or per unit fixed cost. You can use any of the logic. How to calculate average fixed cost? Total fixed cost divided by output. How to calculate average variable cost? Total variable cost divided by output. This is the economic point of view. But when it comes to our exam point of view, so you can compare this to total variable cost. That is nothing but quantity into per unit variable cost. This is the way to we calculate. But when come to this SCM as well as in this maximum minimum calculation, they will use equation mode element of the variable cost. So 2q square plus 4q represent the q, represent if q changes, cost also changes. So that is nothing but variable nature, total variable cost. Are you guys clear? They will not give numbers, they will give equations in your CMA final Spm&Bv. Next, total fixed cost. They are not give numerical value, they will give equation mode. But when come to the equation mode, so constant value is known as total fixed cost. Why constant value is known as total fixed cost means, so if there is a no q means this is the cost not vary with change in level of output. Are you guys clear? Next, so numerical is not there. So here total cost equals to total variable cost plus total fixed cost. So total variable cost equation plus total fixed cost, that is nothing but total cost equation, 2q square plus 4q plus 50,000. Okay. Next, when come to the marginal cost, so they will not give numericals. So here you have to use the concept name called differentiation. So marginal cost represent only the word differentiation. Marginal cost represents only the word differentiation. So when it come to the concept expresses, difference between new cost and old cost. Now, for the purpose, mathematically they are using a concept name called differentiation, d by dq or d by dx. So in a new material they provided d by dq. In old material they use a concept name called d by dx. That is called differentiation of the total cost. So the differentiation of total cost is known as a marginal cost. So I hope you already know the total cost, 2q square plus 4q plus 50,000. For the differentiation of that is known as a marginal cost 4q plus 4. So now I will explain how this 4q plus 4 is came. Now few basic things you have to learn for differentiation purpose. So the first one, d by dx or d by dq. Don't confuse q equals to x here. Q equals to x here. So the d by dq, why? Because q equal to x, that is nothing but output. Here each and everything I am computing for the output. So now the d by dq of c represent constant, that is nothing but 50,000. D by dx of 50,000. So this will apply individually each and everything. Now I am applying to 50,000. So d by dq of 50,000 constant. So the answer is 0. The answer is 0. Next, d by dq of q, that is nothing but you can take x also. D by dq of x. So the value is 1. The value is 1. You can observe d by dq of 4q is there na. Now d by dq of 4q. Now the q value is 1. 4 will be continue. 4 into 1, 4 rupees. That is the way the 4 is came. Next, d by dq of x power n or q power n. So if there is a power n, the formula you have to write like this: n into q, n minus 1. Are you okay? But when it come to the point, so d by dq of 4q square is there. The q square is nothing but it's look like a x power n. Na? Now n will come to front. So already 2 is there. The power will come to front. Again another 2 into q power n minus 1. That is nothing but 2 minus 1. So what happened? 2 into 2, 4 into q, 2 minus 1 power 1 only. So you need not to write. This is the way 4q is came. Hope you guys clear. So do you understand this basics of differentiation? Guys, please respond. Do you understand the basics of this differentiation, ma? If you know this, that is sufficient for us. If you know this concept, if you know this basic formulas, that is sufficient for us. Please respond. Okay, then fine. So as per our ABC analysis, we want to start maximum minimum problem number 8. See problem number 8. Cost equal to 300x minus 10x square plus 1 by 3 x cube. 1 by 3 x cube. Now case A requirement: output at which marginal cost is minimum, output at which average cost is minimum, output at which marginal cost equals to average cost. Now this entire maxima minima concept or marginal cost concept, whatever it may be, the purpose is you have to figure out output. Now when it comes to the maxima minima concept says that follow 3 steps. Step 1. Now this step 1, what they say means apply first order derivative. First order derivative for given function. Now the given function is maybe average cost function or a total cost function or marginal cost function, whatever it may be. Okay. Now the given function for what are the function they given, you have to apply first order derivative for that. You can observe output at which marginal cost is minimum. Here the given function is marginal cost. If you have marginal cost, apply first order derivative. That is a step 1. Step 2 equates step 1 answer to 0. So what are the answer you will get in the step 1? You have to equates to 0. If you equates is 0, you will get x value. You will get x value. That is nothing but output value you can. Now the step 3 is a proof. What about the step 3? Proof. So when it comes to this proof, says that apply second order derivative to step 1 answer. So what are the step 1 answer you will get? Apply again do derivative. Do again derivative. Then you will get an answer of positive value or a negative value. Positive value or a negative value. Now the positive value represent minimum function. The negative represent maximum function. So sometime in step 3 also they are not get numbers, they will get a equation mode only, 2x or 2x square, that kind of things. At that time substitute step 2 x value in that equation, you will get answer. In step 3 don't check numerical value, check only sign. Positive sign or a negative sign. If it is a positive sign, that is called minimum function. If it is a negative sign, that is called a maximum function. Are you guys clear? Now another mistaking area. So I said already, how you get MC? I said first order derivative d by dx of total cost is nothing but MC. D by dx of total cost is nothing but MC. Now after getting the MC, you have to apply step 1, step 2, step 3. Why I am explaining this means lot of students are confusing here. Sir, already here differentiation is completed. It means step 1 is completed. No ma. So this is the differentiation for marginal cost calculation. That is a differentiation for marginal cost calculation. After calculating the marginal cost, so your given function will come. For that given function, you have to apply step 1, that is nothing but first order derivative. So first figure out the marginal cost with help of differentiation, then apply first order derivative, then equates to 0, then apply second order derivative, then you will get an answer. Based on that, you have to write the content. So it is a maximum function or minimum function. Hope you guys do you understand the concept of this maximum minimum. Have you got it? Manan, do you get it, ma? Okay, then when it comes to illustration number 8, first to figure out the marginal cost. Now wait a minute. Yeah. So first figure out the marginal cost. The marginal cost equal to d by dx of total cost. Now d by dx of, sir, if there is a no clarity about the cost represent, it is a total cost, sir. If they specifies only, you have to take in a point called average cost. If there is a no specification of the average cost, the point of discussion is a total cost. So the differentiation of total cost is nothing but marginal cost. So what about the total cost? 300x minus 10x square plus 1 by 3x cube. Now the next step, d by dx of 300x minus d by dx of 10x square plus d by dx of 1 by 3x cube. Now what happened? D by dx of 300x. X is a only one element now. There is a no power n. That's why the value is 1. D by dx of 300x, 300. Now here d by dx of 10x square. It is a look like a x power n. Now minus 2 into 10 into x power 2 minus 1. That is nothing but 1 plus d by dx of x cube. So 3 into 1 by third into x square. Now 300 minus 20x plus 3 get cancel x square. So this is called marginal cost. This is called marginal cost. Guys, clear? Now this is the objective. For this objective you have to apply step 1. Now what about this step 1 ma? What about this step 1? First step 1, d by d first order derivative of the given function. So d by dx of constant 0, d by dx of 20x minus 20, d by dx of x square plus 2x. So the step 1 answer is 2x minus 20. Now what about this step 2 ma? You have to equates to 0 of step 1. Now 2x minus 20 equals to 0. So 2x equals to, send this minus 20 to that side, plus 20, x equals to 20 divided by 2, 10. So step 1 x came. Next when it come to next when it come to step 3, first order derivative for step 1 answer. So not first order, second order. So if I apply the second time derivation for this, d by dx of 2x 2, d by dx of constant 0. Now if the answer is positive, if your answer is positive, the given function is a minimum. Given function is minimum. Are you guys okay? Next when it comes to the point C, output at which, point B, output at which average cost is minimum. Output at which average cost is minimum. Okay, then find C. First, I don't have average cost. First, I have to figure out average cost. Now, I have total cost. Now, average cost equals to total cost divided by output. Here, output represent x only, no? Total cost divided by x. Now, the total cost is how much, ma? 300x minus 10x square plus 1 by 3 x cube divided by x. 300x divided by x minus 10x square divided by x plus 1 by 3 x cube divided by x. X get cancel. Here also 1x cancel. 1x cancel. What happened? 300 minus 10x, x 1x cancel, plus x square divided by 3, or 1 by 3 into x square. You can write anything. Are you okay? So yes, I got the average cost. For this average cost is nothing but x square divided by 3 minus 10x plus 300 is the average cost equation. For this average cost equation, you have to apply first order derivative equates to 0 and second order derivative. Which problem it is? Problem number 8. See problem number 8. So if you apply step 1, the answer is 2 by 3x minus 10. If you equates to 0, you will get x equals to 15. If you apply second order derivative for this answer, you will get positive. If it is a positive minimum function, if it is a positive, it is a minimum function. Okay. Now that is the point C is very important. They're saying that output, that is nothing but x value at which marginal cost equals to average cost. I already calculated marginal cost equation and average cost equation. By equating the two, the x value you have to figure out. That is the case C. That is a case C. Now see, marginal cost I already calculated 300 minus 20x plus x square. Now average cost just we calculated 300 minus 10x plus 1 by third x square. Now by equating the two, so shuffle it, you will get for example, if you send this values into this side, signs will be changed. If you send this values into this side, signs will be changed. Now you can observe. So I keep it this in this side only. I send it this entire values into this side. Plus will be converted as a minus, minus will be converted as a plus. So minus 300 plus 10x minus 1/3 x square. So minus 3 plus 300 minus 300 get cancelled. The pending values are constant values completed. I check with the x values. Minus 20x is there, plus 10x is there. Net what happened ma? Minus 20x plus 10x minus 10x. Next x square is there, minus 1/3 x square is there. So what happened? Plus x square minus 1/3 x square represent 3x square minus x square divided by 3. That is nothing but 2x square divided by 3. So that is a value, 2x square divided by 3. Now, so after that some equation will be there, minus 10x plus 2x square divided by 3, that equivalent to 0. So if you are sending these values into this side means you need to equate to 0 for this. Now when it come to so minus 30x, this will be reflected here, minus 30x plus 2x square divided by 3 equals to 0. If you send this 3 into this side, the 3 will be 0. Why? Because 3 into 0 into anything, 0 only. Minus 30x, 2x square minus 30x equals to 0. Here if you take a 2x common, x minus 15 equals to 0. If you send this 2x into this side, so 0 divided by anything, 0 only. You will get x minus 15 equals to 0. So the x equals to 15. So this is a way to calculate x value if marginal cost equals to average cost condition. This is a condition set by question paper itself. Are you guys okay? Next ma. 8 completed. Come to 9 ma. Problem number 9. Can we write necessary conditions and sufficient conditions like SCM? No needed ma. So you can observe this is the points. This is the points. So we no need to write any necessary conditions. Are you okay? Then fine. Come to the illustration number 9. So Athithi Agarwal, sir, where can I get these notes? This notes is available in our shikharatutorials website ma. You can purchase. Now when come to the illustration number 9, so the real estate firm has estimated the cost of building an office block X floors high as follows. So one of the important question. So what are the discussion today? All are important only. So you have to keep some more importance for this question. So 10 crores of land, construction cost 0.5 crores of per floor, some specialized cost of 0.10x. Please read it as a 0.1x number of floors of x crore per floor. How many floors should the office block contains if the average cost per floor is to be minimized? So they're asking a question, average cost, minimum or maximum you have to figure out, as well as minimum cost, average rupees also you have to figure out. Two things is there. So before the two things, if you want to check minimum or maximum, first you need to know equation. First you need to know what equation. Equation is not there, you have to create equation here. So create equation here. The point you have to understand, so here the floors is there the floors is nothing but output here. The floors is nothing but output. Now when it comes to the floors is nothing but output, that is nothing but x. That is nothing but x. Now see this point. So 10 crores of land, that is nothing but constant value. That is nothing but constant value. Next, construction cost. The next one is construction cost, 0.25 crore per floor. That is nothing but, if floors are increases, construction cost also increases. If floors are decreases, construction cost also decreases. That's why, so 0.25x we have to consider. 0.25x we have to consider. Why? Because it is a variable cost. It is a variable cost. Next, the point, some specialized cost 0.1x. Please read it as a 0.1x into number of floors of x. So that is nothing but 0.10x into x. That is nothing but 0.10x square. 0.10x square. Hope you guys clear. So the specialized material cost already incurred per floor. Now into so there is a point they always said 0.1x. You have to read it as a 0.1x into number of floors of x. That is nothing but 0.10x square. If you wrongly taken 0.10x, that is a wrong calculation. So you have to consider as an x square. Next, how many floors should the office block contain if the average cost per floor is minimized? Now see illustration number 9. So calculation of total fixed cost. The land cost is nothing but 10 crore rupees is a fixed cost. Calculation of total variable cost. Construction cost plus specialized cost. Now the construction cost is 0.25x. The specialized cost is 0.1x into x. So 0.10x or 0.1x, both are same only. Now the total cost equals to total variable cost plus total fixed cost. So 0.1x square plus 0.25x plus 10. Now they're asking about average cost. They're asking about average cost minimum or not. So first I have a total cost. Now I need to convert the total cost into average cost. So how to calculate average cost? Total cost divided by output. So here output is x only now. So the total cost divided by output, you will get average cost 0.1x plus 0.25 plus 10 divided by x. Okay. Now for this I have to apply step 1, step 2, step 3. But the x value we will get, so x value we will get at x step 2 itself only. Now see one point you have to understand now the 1 by, not 1 by, 10 by x is there now. Now the 10 by x we can write like this 10 into 1 divided by x, or we can also write like this 10 into x power minus 1. This 1 by x we can rewrite as x power minus 1. So if you don't convert like this, so you will confuse if you convert like this only, you will get an answer. Hope you guys clear. Now step 1, first order derivative for average cost. So d by dx of average cost equation. So d by dx of 0.1x, that is nothing but 0.1. So so I converted this 10 divided by x into 10 into x power minus 1. Okay. Now d by dx of 0.1x, so x value 1 so 0.1. d by dx of 0.25 constant 0. Now d by dx of 10 into x power minus 1. What happened is, so n into 10 into x power minus 1 will happen. That is nothing but n minus 1, right? Now What is the n here? Minus 1 only, n here. Minus 1 into 10 into x power minus 1 minus 1. What happened? Minus 10 x power minus 2. So this is a point. Now, so 0.1 minus 10x power minus 2. Now 10x power minus 2, can I write like this? 10 divided by x square. Why? Because so x 1 divided by x square, we can write x power minus 2 now. So already it is in the x power minus 2. Now I convert it into x 10 divided by x square. Now this is the step 1 answer. Step 2 equates to 0. So 0.1 minus 10 divided by x square equals to 0. What happened? X square 0.1 x square, it will be multiplied here. Minus 10 divided by x square equals to 0. Now if you send this x square into this side, it will be 0. So 0.1 x square minus 10 equals to 0. 0.1 x square equals to, I am sending this 10 into this side. So if minus 10 went to that side, it acts as a plus 10. Now x square equals to, I will send this 0.1 into that side. Here multiplication, if you send this side, divided. 10 divided by 0.1, that equals to 100. Now the x square equals to 100. X equals to square root of 100, that equals to 10 per floor. 10 floors. This is the way to calculate x, number of floors. Now step 3 is not required. So step 3 is not required. They just asked about number of floors. That is nothing but x. Output only they are asking. Output only they are asking. They are not asking about the minimum cost or maximum cost. They are asking about the question. So what about the x? That is nothing but output. That is nothing but output. Guys, clear? Okay, then fine. Next, 11, illustration number 11. Illustration number 11. Now here also student need to learn new thing. It is related to the profit. It is related to the profit. So I already explained cost related elements. Now I know I want to give a clarity about the profit related elements. So here profit equals to total revenue minus total cost. Total revenue minus total cost. And there are sometimes they will ask average profit. Now total profit divided by quantity or output is known as average profit. Marginal profit, or you can also use a word called additional profit. Now the additional profit equals to first order derivative of total profit. So first order derivative of total cost is known as marginal cost. Here first order derivative of total profit is known as a marginal profit. So complications in this calculation, in some questions they will give price equation. And some questions they will give quantity equation. Now if the price equation is given, total revenue equals to price equation into x. So if you multiply with an output, you will get a total revenue. So how you get total revenue? Price into quantity. That's the logic they are using. Price equation into x, you will get total revenue. But don't multiply like this. For quantity equation is given, x into price is not a logic to express. Why? Because here we have to figure out x only. At that time you have to convert quantity equation into price equation. After converts the price equation, then you have to figure out price equation into x. These are the complication involved in this profit point of view calculation, and it also be one of the very important point we have to learn. We have to learn the point again, don't remember. So if they gives a price equation into x, multiply with the x, you will get total revenue. If they provide quantity equation, that is nothing but x equation, don't multiply with p element. Why? Because that is not ultimate agenda to figure out. So the ultimate agenda to figure out is what? X value. X value. Guys, clear? Okay, then fine. Now see here, a manufacturer can sell X items at a price of 330 minus X. So price equation is given 330 minus X. Now the cost of producing X items, X square plus 10X plus 12. So I said already, if there is no specification about the element of the cost name, so the point is total cost. The point is total cost. The total cost equals to X square plus 10X plus 12. Now, how many items should he sell to make the maximum profit? Also determine the maximum profit. So here also they are asking how many units sell. So you have to figure out X. That is the first question. Also is the second question. Also determine the maximum profit. That is nothing but rupees. If you substitute X value in profit equation, you will get rupees of profit. So for find outing of X, when it comes to the find outing of X, you have to apply. So for find outing of X, you have to apply step 1, step 2, step 3 for profit equation. Now I don't have a profit equation. I have to figure out profit equation first. So profit equation equals to total revenue equation minus total cost equation. Total cost equation is there, revenue equation is not there. Price into quantity minus total cost. Now price equation how much? 330 minus X into quantity X minus total cost X square plus 10X plus 12. Now 330 into X, 330X minus X into X, X square. That is called revenue equation. This minus will be multiply each and every element. So minus X square minus 10X minus 12. Now solve this equation, you will get a profit equation. Now when it comes to profit equation, minus 2x square minus 2 minus x square minus x square minus 2x square plus 330x minus 10x plus 320x minus 12. This is the profit equation. For this profit equation, you have to apply first order derivative as a step 1. So if I apply d by dx of minus 2x square minus 4x, d by dx of 320x 320, d by dx of minus 12 0. Now step 2 equates to 0. Minus 4x plus 320 equals to 0. Minus 4x, send this 320 to that side, plus 320 get converted into minus 320. Minus get cancelled. X equals to 320 divided by 4. Now the x equals to 80. That is the first question answer. For this, you have to do proof step 3. So second order derivative of first equation. So d by dx of minus 4x minus 4. d by dx of constant 0. Now if your answer is minus 4, the given function is a maximum function. If it is a positive, minimum function. If it is a negative, maximum function. Guys, clear? Now the point, they are asking about profit also. So profit equation already is there here. Minus 2 into 80 square plus 320 into 80 minus 12. If you solve this, so you will get answer 12,788. This also be a 7-mark related exam question. In profits point of view, I explained cost point of view one problem. and some more advanced problem relating to the land floor calculation. Now it's related to the profit calculation. Now it's related to the profit calculation, guys. Okay, now problem number 12. Problem number 12. So the total cost function of firm. So okay, total cost is given ma x cube divided by 3 minus 5x square 5x square plus 28x plus 10, where c is the total cost and x is the output. Okay, then fine. A tax of 2 rupee per unit of output is imposed, and the producer adds it to his cost if the demand function is given. So the demand function represent price equation or quantity equation. So demand function represent price equation as well as quantity equation. You have to check. I want price equation. If they give quantity equation, I know how to convert. That's the point you have to understand. So if it is a price equation, no issue. If it is they give x equation, at that time you have to convert that x equation into price equation for the purpose of calculating total revenue, where P is the price per unit of output. Find the profit maximizing output, that is nothing but x calculation, and price at the level. So price calculation here, don't insert x value in profit equation. Insert x value in price equation, you will get a price value. So they're not asking about the profit, they're asking about price. Now generally this is their cost ma. This is their cost. They're newly changes in the GST. You can take an example, sir. You can fix a purchaser. You will get this question for this attempt. Why? Because there is a changes in GST. Are you guys clear? So they can frame like that also, sir. So what happened means, due to changes in GST, previous cost is this equation. They forgot to add 2 rupees of tax. Now if tax added, cost also changes. If tax added, cost also changes. Now the point is, the tax is a fixed cost or variable cost is the point. If it is a fixed cost, you can add directly 2 rupees. If it is in a variable cost, you have to add 2 into x, that is nothing but output. You can observe 2 rupees per unit of output. That's why the tax equals to variable cost 2x. Now you have to add this 2x to this equation. You will get new total cost. New total cost. Now the new total cost equals to existing cost plus tax. Now the existing cost, x cube divided by 3 minus 5x square plus 28x plus 2x of tax plus 10. So x cube divided by 3 minus 5x square plus 28x plus 2x, 30x plus 10. This is a new cost equation. This is a new cost equation. See here. So cost, price, due to tax, cost equation changes. The tax equal to 2x. If I added, it will be 30x. This is the new equation. Now total revenue equals to, total revenue equation is not there. That's why I figured it with price into x, not x into price. Don't forget that point. So price equation into x, you will get a revenue equation. Now the profit equals to total revenue minus total cost. So the profit equation minus x cube divided by 3 plus 2500x minus 10. If you apply step 1 for this equation, the answer is x square plus 2500. If you equate this to 0, you will get a x equals to 50. So they are asking about price, not profit. Now the price equation 2530 minus 5x, substitute the x value 50, the price is 2280. Any complication in this problem number 12 ma? Any complications? Mohit, it will there in YouTube ma, up to your exams completion. So I will not delete, I will not hide. So after illustration number 12 in our ABC category, illustration number 18. Illustration number 18. When it comes to the illustration number 18, nothing is new is there. Instead of cost elements, they provided efficiency elements. Instead of output point of view, we discussed every problem now. Here they will use the concept of employee and efficiency. So that the employee is nothing but worker and efficiency. So what we calculated in above calculation, d by dx or d by dq we used. But when come to this problem, we are using d by dw. D by dw. So that is nothing but efficiency relating to worker. Here the output is nothing but worker, input is nothing but efficiency. Hope you guys clear. Now the d by dw of efficiency equation is nothing but problem here. So same step 1, step 2, step 1, step 2, step 3. But I think here question some mistake is there. 10E equals to plus 30W minus 392 is not right one. 10 employees equal 10 efficiency equals to minus W cube divided by 40 plus 30W, that is nothing but workers, minus 392. This is a equation. This is a equation. Just this one is missing due to some error. So add that too. Now see, they provided for 10 efficiencies, but the answer they're asking efficiency for one efficiency. That's the purpose. You have to convert the 10 efficiency equation into one efficiency equation. How, sir? Send the 10 into this side. What happened? One efficiency will be there. One efficiency equals to minus W cube divided by 40 plus 30W minus 392 divided by 10. Then you will get efficiency equation. For this efficiency equation, step 1, step 2, step 3. Are you okay? Now, illustration number 18. So given 10 efficiency equals to minus W cube divided by 40 plus 30W minus 392. I want efficiency. That's why I'm converting. Send the 10 into that side. It divided. Now what happened? 10 ones are 3s. Here also you can take 39.2. But what happened here? So 40 into 10, 400. Now the efficiency equation minus W cube divided by 400 plus 3W, 10 get cancelled now. 392 divided by 10, 390.2. So this is the efficiency equation for this step 1, step 2, step 3. Now check it here. So if you apply step 1, so cube will come 3 come to front, and here 3 minus 1 2 minus 3W square divided by 400 plus 3W. The differentiation is 3. Why? Because W value is 1. 3 into 1 3. So the constant is 0. Now I need to equate this to 0 as a step 2. If I equates to 0, what happen? This will be multiplied here and divided with total 400. If you send this side, 400 into 0, 0. Now minus W square plus 1200 equals 0. Minus W square, send this into this side. What happened? Minus 1200. Now minus minus get cancelled. W square equals to 1200 divided by 3. That is nothing but 400. Now the square, if you send that side, it will act like a square root. So W equal to square root of 400. 20 per worker is a W. Now step 3 is proof. So the answer is minus 6W divided by 400. If you substitute W value here, you will get a value. But I said already, value is not important for us. The sign is important for us. The minus answer is there. The minus indicates a maximum function. Minus indicates maximum function. So next, 18 completed. Illustration number 21. illustration number 21. When come to the illustration number 21, so not that much of difficulty is not there, but the point is for x calculation, that is nothing but output calculation, we have two logics. One is maxima and minima concept. Another one is market concept. Not market, equilibrium point concept. So if they specifies market name, in the question paper, so we have multiple markets like monopoly, duopoly, oligopoly, monopolistic. If they specifies like that regarding to the market, at that time x calculation, that is nothing but output calculation, equals to mr equals to mc. Remaining all times, if they ask a question maximum cost or minimum cost or maximum profit, that kind of question, you have to apply step 1, step 2, step 3. So this point student need to understand. If they gives market names, how to determine output? mr equals to mc. If they not give particular market name, they ask about the maxima minima. At that time, you have to use step 1, step 2, step 3 to compute output. Guys, any doubt regarding to this point, guys? So when I need to use the concept of mr equals to mc, when I need to use the concept of step 1, step 2, step 3, that is a very, very important point. Yeah, Mohit, it will remain YouTube only up to your exams. I will not remove. So okay, then fine. Guys, do you understand the concept of this? When I need to use mr equals to mc, and when I need to use step 1, step 2, step 3. So here step 1, step 2, step 3 also find outing for what ma? Output. So this mr equal to mc also using for what ma? Output calculation only. Now see this question 21. A radio manufacturing produces output 6 per week. The total cost x square plus 78x plus 2500. He is monopolist. Pankaj. So if they provides market name, so as per market names, so you will get clarity, some more clarity. Wait for a few minutes. At the time of market discussion, I will give clarity. But as of now, you have to understand only thing. If they are asking output calculation in market point of view, you have to use this concept of mr equal to mc. Just understand that only. I will give full clarity why we are using mr equal to mc later. Now when it comes to a radio manufacturer, so cost is given, and a monopolist, you can observe the word monopolist. So monopolist, and the demand function for this product is x equals to 600 minus p divided by x. I said already, if you wanna calculate total revenue, don't multiply with x into p, multiply with p into x. Yes or no? But here p is not there, x is there, but you have to convert x into p equation. When the price is p per set, show the maximum net revenue is obtained when 29 sets are produced per week. That is the monopoly price. So here they are talking about monopoly market related. Under monopoly market, so output determination equals to mr equals to mc. So how they determine the output ma? Based on marginal cost equals to marginal revenue. Marginal cost equals to marginal revenue. That's why don't use this step 1, step 2, step 3. This is a clue we have, monopolist or monopoly. The single seller is known as monopolist. The market name is called monopoly. Under monopoly, output not determined with the help of maximum minimum concept, output determined with the help of equilibrium point concept. That equilibrium point concept is nothing but MR equals to MC. Now MR equals to MC, I understand. I don't have MR, I don't have MC. How I got MR? D by dx of total revenue. How you get MC? D by dx of total cost. Yes, I have a total cost equation. For this first order differentiation is nothing but marginal cost. I got this. What about this total revenue? Total revenue is not there. First we have to figure out total revenue. So how you get total revenue? Price into output. Price equation is not there. Convert that price output equation into price first. These are the complications involved in this question. Hope you guys clear. Now illustration number 21. So illustration number 21. So as per market's point of view, how to determine the output means, equilibrium point basis, MR equal to MC. So first order derivative of total cost is nothing but MC. So that's I applied. X square value 2x, 78x value 78, constant value 0. So 2x plus 78 is the marginal cost. Next, when it comes to total revenue, first I have to figure out total revenue. Before that, I need to convert x equation into p equation. X equals to 600 minus p divided by 8. So if you send this side, 8x equal to 600 minus p. I want p. Send this 800 into this side. What happened? Plus p equals to 600 minus 8x. Now this into x value, you will get total revenue. Total revenue equals to 600x minus 8x square. Now differentiation of this 600x minus 8x square is known as marginal revenue. So 600x value 600, 8x square value 16x. Now MR value is there, MC value is there. Equation is not, that equating point gives the x value. Now the MR equals to MC. So shuffle this, send this 2x into this side, 16x into this side, 78 into this side. So 18x plus 2x, 600 minus 78. So 16 plus 2, 18x. 600 minus 78, 522. The x equals to 29 units. So calculation of monopoly price. Substitute x value in price equation. You will get a price value. 368 per unit. So the next problem, illustration number 20. Illustration number 20 is a topic relating to shutdown point. The topic relating to shutdown point. So shutdown point means AR less than ABC. So if company unable to recover its variable cost, at that time only shutdown point will came into the picture. So if company making a losses, it is not a right time to take a decision of shutdown. When it is the right time to take a decision of shutdown means if you were unable to recover your variable cost, fixed cost is irrelevant. If you are unable to recover variable cost, at that time you have to shut down your business is the best option. That's a concept. Now here average revenue represent per unit revenue. Per unit revenue is nothing but price. If price is less than average variable cost, at that time you can shut down the company. Now that is called shutdowning point. The shutdown point, that is called shutdown point. The shutdowning point is nothing but price equals to ABC. Here it is the interest of the owner. Why? Because he had just recovered his variable cost. So he need to pay fixed cost also. So if fixed cost holder are not agree to or not accept to these payments or not, they will give a time to you, no issue. If they are not giving time, at the time also you have to do shutdown. So but this is called shutdowning point, this is called shutdown point. Are you guys clear? Now, so for example, so the shutdowning point is nothing but price equals to ABC. It means, can I name it like, if price is less or average variable cost is less, that is called shutdown point. That is called shutdown point. So if there is no information to calculate ABC, at the time if I know the price less than that price is shutdown point. I don't know price calculation, I have average variable cost calculation. At the time I will calculate average variable cost, what are the amount I got, based on that I can say, if less than that, that is called shutdown point. Shutdown point. So I will give some more clarity here. If average revenue is greater than average variable cost, continue. If average revenue equal to average variable cost, continue or shut down. If average revenue is less than average variable cost, shut down point. Are you guys clear? So what the logic I am using means, here is a logic I am using. I don't know AR value, but I know AVC. It means AVC is less than price. That is nothing but a shutdown point. If I don't know ABC information, I know AR information. The both are equal at a point, na? So if less than that, that is called shutdown point. Are you guys clear? If you know this logic, you can easily answer this illustration number 20. Why? Because price related information is not there, but cost related information is there. By using that cost information, I can find out average variable cost rupees. So the point, if less than average variable cost. Why? Because at a shutdowning point, price equals to ABC, na? Price equals to ABC. That's why if less than price or less than average variable cost is known as shutdown point. Now, average variable cost is there. If you apply first order derivative, second order derivative, you will get x value. If you put that x value in that equation, at that equation, you will get a ABC. Now see, ABC equals to 300 minus 40Q plus 2Q square. If they providing Q, there is no difficulty. Instead of X, they are giving Q. In new syllabus, they are using a word called Q. In old syllabus, they are using a word called X. That's it. Now differentiation with Q of ABC. So 0 minus 40 plus 4Q. Now step 1, this one. Step 2, minus 40 plus 4Q equals to 0. 4Q equals to 40. Q equals to 10. So if I substitute here, ABC equals to 300 minus 40 into 10 plus 2 into 10 square. So 300 minus 400 plus 200. Now plus 500 minus 400, the answer is 100. Now if average variable cost is less than 100 rupees, you can shut down. So if the price falls before 100 rupees, the firm has to shut down its operation in short run. Sir, here price is not there, na? Here we calculate average variable cost, na? That's the point I said. AR equals to average variable cost over our price equals to average variable cost. That's the logic they used. If it is a less than 100 rupees price falls, it is a shutdown point. It is a shutdown point. Hope you guys clear. Guys, okay? Okay, then take a break of 30 minutes. After 30 minutes, we will continue remaining portion. Okay, guys. Shall we start? So, okay, next the concept. So first you have to understand concept, then you can easily answer. Why? Because in new syllabus, in new syllabus from this chapter, they're using this concept only. So they're not focusing on maxima minima. They're mainly focusing on this profit maximization under different markets. That's why first I will give a clarity for concept. Later on we can discuss about the problematic part. Okay, then fine. So when it comes to profit maximization under different markets, first here markets are classified: perfect competition market, imperfect competition market. So there is a no further discussion relating to the perfect competition, but when it comes to imperfect competition, it again classified into monopoly market, duopoly market, oligopoly market, and monopolistic market. Monopolistic market. Now the point, monopoly market discussion is needed, and monopolistic market discussion is needed, and perfect competition market discussion is needed. But the questions are framed only based on this monopoly market. Are you guys clear? Now when it comes to the discussion of perfect competition, so how we decide this is a perfect competition means they have some conditions. If the conditions are satisfied, that is called perfect competitive market. Now let us check the condition. Large number of buyers and sellers, homogeneous product, the product they're selling homogeneous. The word homogeneous means identical product or same products or similar products. If these two basic conditions are satisfied, that is known as perfect competitive market. Next, free entry and free exit. The word free entry and free exit, there is a large number of buyers and a large number of sellers. There is a large number of buyers and a large number of sellers. They need not to take any permission to entering into the market for exit of the market. Next, uniform price. In this entire perfect competitive market, they are maintaining uniform price. Uniform price, that is nothing but same price for all sellers. Same price for all sellers. The reason behind this same price for all sellers, because of the large number of suppliers, no one can control the entire market. No one person can control the entire market. That's why individually companies can't fix the price. They need to follow price fixed by a industry. Now this entire perfect competition, who will fix the price means industry will fix the price. Industry will fix the price. Now all companies are price followers, not creators. Their price they can't create. Who will create? Industry will create, companies will follow. Because of large number of buyers and supply, no one single person can control the entire market. That is the logic behind the uniform prices. So in perfect competitive market, the prices are uniform. The prices are uniform. Guys, clear? Next, when it come to uh, it follow price mechanism. It follow price mechanism means, so you already know demand and supply curve. Based on demand and supply, they figure out equilibrium point. On that equilibrium point, what are the price is there, that price is known as equilibrium price. That's decided by industry. That price will follow all companies. Next, no selling cost. Why? Because there is a no selling cost means if there is a selling cost, prices need to be change. But what the condition? Uniform price. That's why selling cost will not incur. Government and firm not fix the price. Who will fix the price? Industry will fix the price. Firm is a price taker, industry is a price maker. Hope you guys clear. You can take an example of gold, silver, vegetables. These are the example for perfect competition. So here gold represent not about ornaments. I'm talking about gold bars, gold biscuits, etc. Are you guys okay? So you can visit any vegetable market. For in any shop, they're selling at same price only. That is called uniform price. Why? Because that single seller can't control the entire vegetable market. Next, price and output determination. Who will fix the price? Who will decide the output? So industry will fix the price. Company will fix the output. This is a point of discussion. How they fix the output? How they fix the output? They fix the output based on the concept name called profit maximization or equilibrium point of the firm. This is nothing but MR equals to MC. MR equals to MC. So in a perfect competition, they can find out the output or profit maximization point of units only, not price, not price. Now, profit, when it comes to the profit maximization or equilibrium point of the firm, conditions is there ma. MR equals to MC. MC curve cuts MR from below. Where these 2 points are satisfied, that output is known as profit maximization output. So they will give a question, they will give a word in the question paper, profit maximization point. Here the word profit maximization point means not calculating rupees of profit. Here we are calculating output. For that output, if I produce, I will get a maximum profit. If I produced output is less than that fixed output of equilibrium point, I will losing the profit. If I produce more than that output, it will give a losses. 2 points you have to understand. So for MR equals to MC point of view, I decided 1000 units. These 1000 units are the profit maximized units. If you produce less than 1000, due to that you are losing profit. You are losing profit. If you produces more than 1000, here you need to incur more cost, that gives loss. Losing of profit, loss. If you produce only 1000 units, it will give maximum profit. That is the discussion. So that is a purpose we are figuring output with the help of the logic name called MR equals to MC. MR equals to MC. So this is the logic we are used for all firms. This is the logic we are used for all firms, all markets. So one student asked that question. Pankaj, in every market we use this. Yes, Pankaj, in every market for find outing the profitable output, we are using the concept name called profit maximization point. Next. So important terminology, supernormal profits or abnormal profits or economic profit. If your per unit revenue is more than per unit cost, the profit name called supernormal profit, abnormal profit, economic profit as per this economic efficiency chapter. Next, normal profit or zero economic profit. If your per unit revenue is equivalent to per unit cost, no profit, no loss, na, the point is known as normal profit or zero economic profit. If per unit revenue is lesser than per unit cost, that is called losses. If per unit revenue is less than the average variable cost, that is called shutdown point. Next, see, profit optimization, output, profit maximization or equilibrium point. For industry, quantity demand equals to quantity supply is the condition. For a firm or organization or companies, MR equal to MC is the first condition. MC curve cuts MR from below. That is nothing but MC must be positive slope. MCQ purpose only. Next, MC curve cuts AC at AC is minimum. These are the three conditions need to satisfied by a firm for deciding maximum profitable units. But in calculation part, we are using MR equals to MC only. MR equals to MC only. Next, the next point, monopoly market. Monopoly market. So duopoly is not required, oligopoly is not required, monopolistic is not required. Monopolistic is similar to perfect competition, but the only difference is perfect competition selling similar goods, monopolistic market sells indifferent goods, heterogeneous goods. There is a difference remaining similar to perfect competition. But when come to the monopoly market, first you have to check the characteristics. The first characteristic, there is only a single seller, there is a large number of buyers. Next, entry barriers. Generally what we learned in a perfect competition, no free entry, free exit. But when come to here, entry barrier. Why entry barrier? If there is a free entry, free exit, everyone will come and produce a commodity. But that not a character of single seller, na. That's the purpose. There is an entry barrier in monopoly market. The type of good, heterogeneous. There is a no substitutes. The only single good they are selling, that is called heterogeneous. Next, who will fix the price? Who will fix the price? Firm and industry both are same. Why? Because only one seller is there. That is called industry. If you have a multiple person, the collection of persons is known as industry. Here the only one person. That's why firm and industry both are same. Here price will fixed by seller only. Why? Because there is a no large number of sellers. He can control the entire market. So price maker, not a taker. So there is an important concept name called price discrimination. Price discrimination. Lot of students don't know about this concept. I will give a clarity for that. Price discrimination concept. Sir, what is this price discrimination concept means? So what about this price discrimination concept means? I will say in definition point of it, then I will give an example. Seller sells same commodity or same services to different customers at different prices. I am repeating again. Seller sells same commodity or same services to different customers at different prices. So what the thing here you have to understand means, so a lot of students think that he was a monopoly, he can fix the price, so he will charge high prices. High prices leads to high profits. No, it's a notion. It is a notion. Why? Because customer following a blind rule. Customer need a more satisfaction for less spending. Even though there is only available in single seller point of view, so customer had a limit. After that limit, he can't purchase. Even though if it is needed, he will not purchase. Because of the income spend is a minimum. They are using a logic. Yes or no? That's why monopoly will not charge high prices because of his single person. He will charge different prices from the different customer for selling of same commodity. So that is happening in railways. You can take an example of railway. So railway is a monopoly market. Why? Because single seller. So he will charge different prices from the different customer selling of same services. So the AC, sleeper, that is a bonus criteria. The important thing or main focus point is travel. For the travel, they will charge different prices from the different customer for selling of same travel services. You can take any of the monopoly, it will be happen. So if you follow that rule only, they will get profits. Not by using the increasing prices, by using the price discrimination concept only, they will get profits. That is a concept of price discrimination. Are you guys clear? Next, when it comes to the discrimination, here discrimination based on place, based on person, based on time, and based on degree of price discrimination. So based on place, For example, if take an example of Apple. So assumption. So there is a single seller. So they will charge different prices in Kashmir, different prices in Andhra Pradesh. That is called price discrimination. When it comes to the person,
when it come to the person. In a person point of view, when a person point of view, so there is a notion is there is a wrong notion is there. So doctor will charge less prices from the poor people, more money from the rich people. So that is just a book's point of view only. When reality it will happen different. So that is an example for person point of view discrimination. When it come to the time, seasonal fruits are when you take an example for time discrimination. But when come to the degree of price discrimination, here it classified into first degree, second degree, third degree. Third degree is our calculation part. Now the first degree says that maintaining consumer surplus equals to 0. So they will charge different prices now. For example, so one bottle is there. One bottle is there. For this bottle, I wanna sell to different customers. So there is a A, B, C. Now A asked this bottle for 100 rupees. I sold him. B asked for 50. I sold him. C asked for 150. I sold him. Are you guys clear? If you meet customer expectation, there is a no consumer surplus. So the meaning of 100 is, so A is willing to pay 100 rupees. The product also I am selling at 100 rupees. There is a no excess bonus. That is called no consumer surplus. That is called first degree. Next, when come to the second degree, if you purchase 10 chocolates, one chocolate is bonus. You have to pay for 9 chocolates only. That kind of concept point of view. So seller providing some basic discount, that is losing some consumer surplus. Now when come to the third degree, as per third degree says, they are single seller subclassified into sub markets. So the main market they can classified into sub markets. For example, here I am producing, this is my manufacturing unit. So I will split my market into two, submarket A, submarket B. So in submarket A, I will charge one type of prices, 10 rupees price. Here I will charge 15 rupees price. Here I will charge 15 rupees price. Guys, clear? So subdivide into submarkets and I will charge different prices based on the condition. That is called third degree submarkets concept. Split into two or more markets based on price elasticity. Next, the profit optimization point or profit maximization or equilibrium point equal to, generally, what is the profit maximization point? MR equals to MC. Yes or no, ma? But when it comes to this third degree, so we are split into two types of markets, sub-markets. That's why we have two revenues. If we have a two revenues, two MRs will there. That's why MR1 equals to MR2 equals to MC. Here also we are using this logic of MR equal to MC only. But due to subdivision, we got two revenues. That's why two marginal revenues, MR1 and MR2. Are you guys okay? Now see here, MR equals to MC is a wrong way of calculation. So MR1 equals to MR2 equal to MC. Why? Because in MR1 I am selling Q1 quantity. In MR2 I will sell Q2 quantity. But in main company I am producing Q quantity. Now the Q quantity is split into Q2, Q1. Next, profit maximization, same condition. MR equal to MC. MC cuts MR from below. MC cuts AC at AC is minimum. So this is the example. I hope this problem is not covered in my material also. So this is a problem covered in board book last edition. In new edition they removed this problem, but I have that question in my old material I used as an example for classroom. So see this also. Now you can observe total cost is given, Q2 is given, Q1 is given, Q2 is given. It means what? So this is a main manufacturing unit. From after manufacturing I am selling in market 1, market 2, two markets. Are you okay? Now, so market 1 demand is given, Q1 equals to 21 minus 0.1 P1, Q2 is given 50 minus 0.4 P2, Q equals to Q1 plus Q2, total quantity. Now the question number 1, profit as per discrimination. Profit as per discrimination. Point number 2, profit as per without discrimination. With discrimination, or you get more profit, or without discrimination, or you get more profit is the question. Are you guys clear? Now if I wanna calculate profit, profit equals to total revenue minus total cost. If I know this amount, the difference is known as profit amount. But here I have equation. For equation, if you insert Q1, if you insert Q, now the equation converted into rupees, total revenue rupees, total cost rupees. Now if you want to find out quantity, you have to use the concept of profit maximization, MR equals to MC. This is a blueprint of the question. But MR equal to MC is wrong. Why? Because here two markets is there. That's why MR1 equals to MR2 equals to MC. Now, how we get MR1? D by dq of, why? Because here output representing with Q. So D by dq of total revenue 1, market 1 revenue. You will get market 1 additional revenue. That equal to D by dq of total revenue of second market. You will get additional revenue of second market. Next, D by dq of total cost of main market. So you will get MC. By using this logic only, we are calculating. Okay. So MR1 equals to MR2 equal to MC. Now the point is how to get total revenue. If they given in the question paper, no issue. If they are not given, P1 into Q1, P2 into Q2. Here given. Guys, clear? Next, P1 is not there. Instead of P1, they provided Q1 equation. See, P2 is not there. Instead of P2, they provided Q2 equation. See, it means you have to convert this Q1 into P1 equation, Q2 into P2 equation, then you will get P1 into Q1, P2 into Q2. Are you guys clear? Then you can easily find out TR1, TR2. With the help of that, you can easily find out MR1, MR2. So with help of cost equation, you can find out MC. After getting the MR1 equation, MR2 equation, MC equation, MR1 equals to MC, you will get Q1 answer. MR1 equal to MC, you will get Q1 equation. Next, MR2 equals to MC, you will get Q2 equation. If you substitute Q1 equation in P1 condition, that is nothing but Q1 value in P1 condition or P1 equation, you will get P1 value. If you insert Q2 value in P2 equation, then you will get P2 value. So you have Q1, Q2, P1, P2. If you substitute in this total revenue equation and total cost equation, you will get profit. This is called with discrimination. Hope you guys clear? Do you understand, ma? Now, see here. First, I am converting Q1 equation into P1 equation. See the process. Q1 equal to 21 minus 0.1 P1. I send this 21 to this side. Q1 minus 21, that equal to minus 0.1 P1. Now I want P1. I will send this minus 0.1 into this side. Now multiplying minus 0.1, if it come this side, it will divide. So minus Q1 divided by 0.1 plus 21 divided by 0.1. Now, so here the word Q1 divided by 0.1, or you can also write like this, 1 divided by 0.1 into q1. Now the 1 divided by 0.1 is nothing but 10 minus 10 q1. 21 divided by 0.1, 210. Now the p1 equals to 210 minus 10 q1. If you multiply with q1, you will get total revenue of 1. So 210 q1 minus 10 q1 square. Hope you guys clear. Next when it come to, so if you know the tr1, if you differentiate this tr1, you will get mr1. So d by dx of 210 q1, 210, d by dx of minus 10 q1 square, 20 q1. Next, when you come to the same logic, convert q2 into p2. If you convert q2 into p2, the p2 equals to 125 minus 2.5 q2. Into q2, you will get tr2. So 125 q2 minus 2.5 q2 square. For this differentiation, you will get mr2. So d by dx of 125 q2, 125 minus d by dx of 2 into 2.5, 5 q2. So this is a mr2. Are you guys okay? Now I have mr1. I have mr1, mr2. Now I need to figure out mc. How to get mc? mc equal to d by dq of tc. Now d by dq of tc. So what is the total cost? 2000 plus 10q. So d by dq of 2000 plus 10q. The d by dx of constant 0, d by dq of 10q, 10. So mc equals to 10. mc equals to 10. Now calculation of q1. How you get q1? mr1 equals to mc. mr1 equals to mc. So if you substitute that, you will get q1 equal to 10 units. Calculation of q2. mr2 equal to mc. So if you substitute that, you will get q2 equals to 23 units. Now the total output they produced 10 plus 23. That is nothing but 33 units in the company. That 33 units they split into two markets. In one market they sells 10 units, another market they sells 23 units. Okay. Now calculation of p1 and p2 by substituting q1 and q2 values in equations. So in a p1 equation, if you substitute q1 value, you will get p1 110. In p2, if you substitute 23 in q2 value, you will get 67.5. Now when it comes to the profit calculation, total revenue minus total cost, that is nothing but p1 into q1 plus p2 into q2. This is called revenue 1 plus revenue 2 minus total cost. So the answer is 322.5. So with discrimination, what is the profit ma? 322.5. Next, when it comes to the case B ma, profit computation under without discrimination. Without discrimination means there is a no submarkets. MR equals to MC. There is a no submarkets. Now here Q represent Q1 plus Q2. That means Q1 equation plus Q2 equation, you will get quantity equation. For this quantity equation, you have to convert P. Now the P equals to minus 2Q plus 142. So total revenue equals to 142Q minus 2Q square. So marginal cost 10, MR equals to MC. So 142 minus 4Q, that equal to 10. 142 minus 10, that equal to 4Q. 132 divided by 4 equals to Q. 33 units. P equals to 142 minus 2Q. The price is 76. Profit equals to 178. Without discrimination, the profit is 178. With discrimination, the profit is 322.5. Now tell me, with discrimination is the best option or without discrimination is the best option? With discrimination is only the best option. With discrimination is only the best option. Guys, clear? I hope, do you understand this? Okay, then fine. Next ma. Illustration number 22. Illustration number 22. The total cost function of monopolist is sir, please provide the soft copy in the website. So I'm in live, sir. So in lunch break, I will provide, sir. Karthikeyan. The total cost function of monopolist is given. So this is the total cost. So 50 plus 40x. They're representing x is nothing but 2 units, x1 plus x2. That is nothing but submarket 1, submarket 2 units. Next, instead of quantity q, they provided x. Here both expresses output only. The total demand is given P equal to 100 minus 2x. This is about total price. Total price. The demand function of segmented market P1 equal to 80 minus 2.5 x1, P2 equals to 180 minus x2. So this is submarket 1 price and this is submarket 2 price. If you want a submarket 1 revenue, you have to multiply with submarket 1 price only, not total price. If you want total revenue of market 2 means you have to multiply with the submarket 2 price, not total price. Are you okay? Now in our example, we need to convert Q equation into price equation, but here they provided directly P1 equation and P2 equation. Now here they added another question. So instead of second question, what we discussed previous problem, without discrimination, right? Here they are not asking about without discrimination, they are adding the concept of elasticity, price elasticity. Why? Because in theory I expressed in submarkets they will plan a price based on price elasticities. I will give a clarity for that too. Now first, if the price discrimination is practiced by the monopolist, what will be the equilibrium output in each segment and what will be the price? So here they directly asking x1 value, x2 value, p1 value, p2 value. So if you want x1, mr1 equals to mc, that gives x1 value. mr2 equals to mc, that gives x2 value. Very clear? Now mr1 equals to total revenue, differentiation of total revenue 1 equal to differentiation of total cost. mr2 differentiation of tr2 equal to differentiation of marginal cost. Now tr1 equals to p1 into x1, tr2 equals to p2 into x2. You need not to convert x equation into p equation, they already converted. So total cost, submarket 1 price, submarket 2 price, computation of x1, x2 on the monopolist market. mr equal to mc is not applicable. Why? Because here 2 submarkets is there. mr1 equal to mr2 equal to mc is possible. Submarket 1, tr1, p1 into x1. So this is a p1, multiply with x1, you will get tr1. This is a p2 equation, multiply with x2, you will get tr2 equation. Now differentiation of tr1 is nothing but mr1, 80 minus 5x1, mr2, 180 minus 2x2. Now the total cost given in the question paper 50 plus 40x. So the marginal cost equal to 40. Now mr1 equal to mc, you will get 8 units of x1. mr2 equal to mc, you will get x2 7 units. The total market produces 8 plus 7 16. No, not 16. 8 plus 7. How much ma? 8 plus 7, 15 units. Okay. Now case 2, calculation of p1 p2 by substituting x1 x2 values. So in p1 60 rupees, in p2 110 rupees. Now here is a concept you have to learn for case 3. If it is a relative elastic market, relative inelastic market, here relative elastic market we will charge less prices. If it is a relatively inelastic, we will charge more prices. So relatively elastic means change in demand is greater than change in price. Change in demand is less than change in price. If demand change is lesser than the price change, that is called relatively inelastic. If demand change is more than the price changes, that is called relatively elastic. For this purpose, I will give an example to keep this point in our mind. Luxury goods. necessaries. When it comes to the luxury goods, if prices are gradually increasing, we will postpone. As a customer will postpone to purchase. That's why company need to charge less prices. If it is relatively inelastic, it is a necessary goods. Even though price increases, customer will buy. At that time, company can charge more prices. Hope you guys clear. Now, there is a formula for calculation of price elasticity. Here the price elasticity value is greater than 1 is the answer. Here price elasticity is less than 1 is the answer. Or sometime less than 1, not only less than 1, lesser than the calculation also indicates relatively inelastic. Now EP equals to minus dq divided by dp into p by q. This is a formula. Here q is not there. Instead of q, I am using x. Are you guys clear? This is a way to calculate here, but you can ignore the minus sign. For understanding purpose, the only formula d by dq dx of dp divided by p divided by x. Now when it comes to the submarket one, I have p1 equation. For here I need to differentiate what equation? Quantity equation. In this problem, you have to convert price equation into quantity equation. Previous problem, you have to convert quantity equation into price equation. But here, for the purpose of elasticity calculation, you have to convert P1 equation into X1 equation or Q1 equation. So if you convert, you will get this. Same logic for market 2. So the X2 equation. Now, price elasticity equal to d by dp of x1 into p1 divided by x1. Now insert the equation and p1 x1. So if you calculate this, you will get answer 8. This is called more elastic. So x2 substitute and p2 value, x2 value, you will get the answer 1.57. You can ignore the negative sign, no problem. This is called less elastic. So more elastic means demand changes more than the price. Less elastic means price changes more than the demand. So that's the point I said. In elastic point of view, low prices. In inelastic point of view, high prices. You can check with the P1, P2. P2 is the highest price. Why? Because it is a inelastic. P1 is a low price because a elastic. That's a concept explanation. Guys clear? Next ma. (22, 23). So when it comes to the 23 ma, this is attempted question ma. So these 3 problems are attempted question only. So they provided domestic market related, export market related, and Q1, Q2 is there, variable cost is there ma. So they're asking about optimum selling price and total contribution for domestic market and export market. So I hope you know contribution calculation. Sales minus variable cost. That's why they provided variable cost. Are you guys clear? So revenue function is there, variable cost is there, contribution equals to revenue function minus variable cost. So you will get equation, maximize the profit, then ask maximum contribution. So for this maximum contribution, you have to do step 1, step 2, you will get Q value ma. If you substitute that Q value in a price equation, you will get selling price ma. So here for calculation of quantity, MR equals to MC is not possible. Then what is possible? Maxima minima is possible. That is called step 1, step 2. Step 1, step 2. Guys, clear? Next. So I think all A category is completed. Now it's time to B category problems. That is illustration number 24. Constraint optimization. Here we are using a concept name called partial derivatives. Partial derivatives. And there is another concept name called HB matrix. HB matrix. So generally till now they will give a optimization function. They will give one function. For that function they will ask maximum or minimum. But in this optimization function they will give optimized function plus objective function. By combination of that optimization function and objective function, we have to solve this constraint optimization problem. So here we are creating Ligarian equation or L equation or Z equation. How it create means the L equation equals to optimization function minus lambda into constraint function or objective function. So you will get L equation. For that you have to differentiate. You will get some values. If you substitute that values, you will get some other values. If you substitute all values in L equation, you will get L value. For that L value, you have to prove that L value is maximum value or minimum value. For proving purpose, you have to use the concept name called HB matrix. If HB matrix is positive, the value is maximum. If HB matrix is negative, the value is minimum. But when coming to the maximum minimum point of view, opposite will be there. In constraint optimization, positive relation, positive maximum, negative minimum. But maximum minimum point of view, positive minimum function, negative maximum function. Don't confuse for these two. For constraint optimization, direct relation. For maximum minimum, inverse relation. So see, constraint optimization, L equation, optimization function minus lambda into constraint function. Step 1, apply first order derivative for L equation. We will get Lx value, Ly value, L lambda values. Step 2, by equating Lx, Ly, L lambda, we will get x value, y value, lambda values. Substituting x, y, lambda values in L equation, we will get L value. Step 4, proof HB matrix, positive maximum function, negative minimum function. Now see, L equation, optimization function minus lambda into constraint function. Now what about the optimized function? 4x square plus 3xy plus 6y square. Subject to the constraint, x plus y equal to 56, you can write like this, x plus y minus 56 equals to 0. So this is the equation number 1. Now step 1, apply first order derivative. So here I am figuring out Lx. The meaning of Lx, I will differentiate only x values, remaining all values are constant. The constant value is 0. I will differentiate only x values, remaining all are constant. Y related, lambda related, all are constant. The constant differentiation is 0. Now d by dx of 4x square, x is there. That's why I will differentiate. The answer is 8x. D by dx of 3xy, yes, x is there. That's why I will differentiate. The x value is 1, the pending is 3y. Now the d by dx of 6y square, constant, 0. The d by dx of minus lambda x, yes, here x is there, minus lambda. D by dx of minus lambda y, constant, 0. D by dx of lambda into 56, 0. Hope you guys clear. Now the Lx value is 8x plus 3y minus lambda. So differentiation relating to x, remaining all are constant. Ly value same, except y, remaining all are constant. Constant. Y is only here, that's why I will differentiate. So 3x plus 12y minus lambda. So when it comes to the lambda, the differentiation only for lambda, remaining all are constant. Constant. Lambda is there. We have to differentiate. So minus x minus y plus 56, this is equation number 4. So you can also write like this, x plus y minus 56 equal to 0, no issue. So calculation of x, y, lambda values. So substituting equation 1 and 3, you will get y value. So the x value, x, you can take x or y, no problem. So here I used x, 9y divided by 5. I kept this as a equation 5. Now substituting the equation 5 in equation 4, I will get a y value. So if I substitute in equation 4, the y equals to 20. If I substitute y value in any of the equation 5 or 4, I will get x value, x equal to 36. Now if I put this y value, x value in again equation number 4, not equation number 4, equation number any of 2, 1, 2, 3, you will get lambda value. So substitute x, y values in equation 1 and 2. So the lambda equal to 348. So if you substitute x value, y value, lambda value in the L equation, then you will get L equation value. The L equation value is 9744. So if they ask a 7 mark question, they will ask up to here only. They will not touch proof. Are you guys clear? So if they ask a proof, means it is not a 7 mark question mark. So proof for L equation by using HB matrix. So this is a way HB matrix create. So 0, gxx, gxy, gx, fxx, fxy, gy, fyx, fyy. Are you guys clear? For this you have to do partial derivative. So here the fxx means in x equation you have to figure out only x values. Here fyy represent in y equation you have to figure out y values, remaining all are constant. Here fxy represent in x equation you have to figure out y values, remaining all are constant. If yx represent in y equation you have to figure out x values. Here lambda x represent in lambda you have to figure out x values only. So here lambda y represent in lambda equation you have to find out y values. If you calculate like this, you will get fxx value, yy, xy, yx, xx, lambda x and lambda y. So these are the values. If you substitute in the HB matrix, you know, if you take this, you have to so for example, so you need to consider this, you need to consider this, you need to consider this. First plus minus plus. So if you consider this, means the row and column will be cancelled, this 4 will be multiplied. So if you solve this, the answer is minus 4. So if it is a minus, the function is minimum. So this is about constraint optimization. So okay, then fine. After constraint optimization, so other problems is there. Problem number 26 and 1. When it comes to the problem number 26, this is a different model we have. So this is considered from the old material. So C limited is obtained the introduction a new product with the free following estimates. So price per unit is given, demand in units is given, direct material, direct labor, variable overhead is given, selling expenses is given, fixed production overhead is given, admin expenses is given. Judging the estimates, determine the tentative price of the new product to earn maximum profit. So for the purpose of tentative price, here they are using a concept name called contribution per unit. Contribution concept they used. You can check here. Estimation of maximum selling price for the given alternatives. In which units gives a more profit, which units gives a more profit, that will be the best alternative. So for the purpose you have to calculate contribution per unit. Why sir you are calculating contribution? You can calculate profit now. So profit calculation is not shows the right decision as per marginal costing. Why? Because fixed cost is common for if you produce or not to be produced. That's why fixed cost is irrelevant. That's why we are taking a decision based on contribution profit only. So you know how to calculate contribution. So first the selling price information is given, demand is given. So selling price into demand, you will get sales. Variable cost related information is given. So on the variable cost also vary. That's why I consider different variable cost per units. Now demand into variable cost per unit, you will get variable cost. Now sales minus variable cost, you will get contribution. So out of this all demand prices, here is the highest profit it will get. So the tentative price is what, ma? 36 rupees. The tentative price is nothing but 36 rupees. They're asking about maximum profit. So contribution, they're asking about maximum profit. Above we taken a decision. The decision not involve fixed cost, but when come to the profit calculation, you have to calculate, you need to consider fixed cost. Now the 36 rupees, the contribution is 45 lakh 36,000, and the fixed expenses is there 14 lakh 40,000, 10 lakh 80,000 of production overhead and selling overhead. So the maximum profit is 20 lakh 16,000. This is the different model we have. Next, when come to the problem number 1. Problem number 1 is a basic demand based question. Attempted question only. So only case 3 will give a confusion, remaining all are easy only. Departmental store of Mumbai conducted a study of the demand for men's ties. It found that the average daily demand in terms of price is given by the equation D equal to 120 minus 5p. Here we are not finding maxima, minima, or MR equal to MC. That's why need not to convert demand equation into price equation. Now you are required to ascertain how many ties per day can the store expect to sell the price of 20 per tie. Now they are asking demand when there is a price is 20 rupees. Now 120 minus 5 into price 20 rupees. 120 minus 100, 20 is the demand. Case 1 completed. Next, when it come to, if the store want to sell 40 ties per day, what price should it charge? Now the demand equals to 120 minus 5p. Now they express this one. 40 ties equals to 120 minus 5p. I want price. Now 120 minus 40 equal to 5p. 80 divided by 5, that equal to p. P equals to, wait. P equals to 16. Next, A completed, B completed, come to C. What is the highest price anyone would willing to pay? So what is the highest? So demand equals to 120 minus 5p. So for one tie is nothing but highest willing to pay. That's a theoretical knowledge need for solving the case C. So the demand is one tie, 120 minus 5p. Now 120 minus 1, that equal to 5p. 119 divided by 5 equals to p. P equals to 23.8. This is the highest price. If you don't know about this one demand, you will not answer this. You will not answer this. Hope you guys clear. So I hope chapter 1 related problem complete, chapter 2 related problem completed, chapter 3 related problem discussion also completed. So what next? Chapter 4, another problem. Chapter 4, another problem. So when it comes to chapter 4, enterprise risk management. From this chapter we will get one theory question and one problem. So here we have 3 units. Unit 1 risk management, Unit 2 corporate risk management, Unit 3 corporate failure. From this corporate failure we will get 7 marks. Now I start with this corporate failure only. When it comes to the corporate failure, you have to learn other than banking companies and banking companies point of view. Why? Because for banking companies there is a discussion called Basel norms. There is a concept name called Basel norms, and that Basel norms, we have to use the calculation part of capital adequacy ratio. In June 23 they asked a question based on this concept. After June 23 they not touched this concept. Maybe don't take choice. We will learn about this Basel norms also. Are you guys clear? Next ma. when it come to other than banking companies, here three concepts you have to focus for knowing the corporate failure. The first concept is corporate sickness, corporate distress, manipulating of earnings. Sir, how can I find out corporate sickness? So you can find out corporate sickness with the help of the concept name called NCAER model. NCAER model. The full form for NCAER, National Council of Applied Economic Research. With the help of that concept, you can find out your company's sickness. Here sickness means not health issue, financial health. Financial health. Next, how I know my company distress. So this distress means they are not unable to meet expenses. The revenues are less. For the purpose only, we're using a name called corporate distress. For our in simple corporate bankruptcy situation. The bankruptcy situation will happen or not, we can assess about the future. Now there is a concept name called corporate distress. These all are predictions. It is not actuals. They all are predictions. Next, how can I predict the corporate distress of my company? With the help of the concept name called Altman G-score. Manipulating of earnings. Manipulating of earnings. For the books of accounts, manipulated or not, how can I figure out means with the help of the concept name called Benisham score. Benisham score. Now, concept number 1, estimation of corporate sickness by using NCAER model. So you already know the full form, National Council of Applied Economic Research. Now, it is an independent and a non-profit economic policy research institute in New Delhi. They will give your company sickness reports. Now, NCAER has been involved in defining, measuring, analyzing sickness companies, especially in collaboration with the government bodies. Now, when it comes to NCAER model, you have to check three things. One is company's cash profit position, company's net working capital position, company's net worth position. Sir, you have to check what? Cash profit position, net working capital position, net worth position. Now the question, how to check? Has to check these three things. Now the question is how to check. So not how to check, why to check. The why to check means we are checking cash profit position for the purpose of profitability measure. For knowing the company profitability, we need to check cash profit position. For knowing the liquidity, point of view, we have to check net working capital position. For knowing the long-term solvency, you have to check net worth position. Now the question is how to check. The cash profit position check is net profit. For that net profit, you have to adjust non-cash expenses, non-cash incomes, non-operating expenses, non-operating incomes. If you adjust that, your accounting profit will converted into cash profit. Your accounting profit is converted into cash profit. Next, net working capital position. How? Net working capital equal to sum of current assets minus current liabilities. Next, when come to the net worth position check. So net worth is nothing but equity. How to calculate equity means equity share capital plus reserves and surpluses plus preference share capital minus fictitious assets. Sir, preference share capital is another kind of people fund. Na? Sir, generally preference share capital is an outside person only, but we promised him I will pay preferredly. If you continue with us, we will convert your preference share capital into equity shares. That kind of fake promises we given to him. That's why when it comes to the calculation part, net worth calculation, you have to consider preference share capital. So here net worth alternative name is equity. The net worth equity alternative name is nothing but net assets. These three are same only, sir. Net worth, equity and net assets. Three are same only. So the net worth equals to equity share capital plus reserves and surpluses plus preference share capital minus fictitious assets. This is a way to calculate. Now when it come to the decision, so when it come to the decision, 3 decisions, out of 3 measures, 1 will be negative. So I calculated cash profit, I calculated net working capital, I calculated long-term solvency purpose net worth. Out of these 3, 1 is negative. At that time, company becoming a sick is the decision. We can say it's not a decision. We need to express on the paper, company becoming a sick. The sickness is started. Sickness is not started. There is a chance for sickness. Case 2. Out of 3 measures, 2 will be negative. Out of 3 answers, 2 answers is negative. That is called sickness started. In spite of sickness is nothing but sickness is started in your organization. Financial sickness. Out of 3 measures, 3 will be negative. Company fully sick. Now when it comes to the exam point of view, if they ask this kind of question, don't solve directly. First write down the theory. So first write down this point, then write down this explanation, then write down the decision. After the decision, put a name called analysis. On that analysis, solve calculations. After solving, say decision based on above analysis. Say decision based on above analysis. Very, very important. If they in this 4th chapter, they are expecting only presentation, not calculation. Why? Because calculation is not that much of difficult here. The only difficultiness is presentation. So let us check further. NCR model problem number 3. Balance sheet of extract of Q Limited as on 31st March 2014. Equity, long-term liabilities, this here, current liabilities, fixed assets, current assets, profit and loss account. So if profit and loss account is asset side, that is called fictitious asset. Next, additional information, depreciation written of 8 crore rupees, preliminary expenses written of 1.6 crores, net loss 25.60 crores. So preliminary expenses written off and goodwill depreciation written off also of fictitious assets only, but they are not reflected in balance sheet. That's why these two we are not adjusting to net worth. These two we will adjust only to the profit or loss. If balance sheet adjusted value, if any there as a fictitious assets, at that time I need to adjust to net worth. Hope you guys clear. Now first, in company there is a no profit, there is a loss. There is a loss. Illustration number 3. Look at this presentation. Proper presentation is there. We are using NCR model for predicting corporate sickness of Q Limited. Under NCR model, they specified 3 parameters for calculation. They are cash profit position, net working capital position, and net worth position. By using above information, we can take a decision. Now cash profit position used for knowing the profitability of a company. So just it is a general calculation. When it comes to the analysis, you have to do real calculation. So next, second parameter, net working capital. Third, net worth position. Decisions involved I recorded. So this is a theoretical explanation. I express it to the examiner. After that, I will start analysis. When it comes to the analysis, first cross profit calculation. So here based on available information, net loss, depreciation, preliminary expenses. So loss, that's why negative, and add non-cash expenses. If you add this, the answer is minus 16. Net working capital, current assets total is there, current liability total is there. Current assets minus current liability, 20.8. When it comes to the net worth, I said equity share capital, reserves and surpluses, preference share capital minus fictitious assets. Equity share capital is there, reserves surplus is not there, preference share capital is not there, fictitious assets is there. The answer is minus 19.2. Now what do you understand? Out of 3 measures, 3 are negative means fully sick. That is a comment that is a decision you have to express. Q Limited is a fully sick company because under NCR model all 3 parameters are negative as per analysis. If you write like this, you can get 7 marks easily. You can get 7 marks easily. Are you guys okay? Up to here, okay? Anyone? You have doubts regarding to up to any problem, you can ask me now. If you don't have any doubts, I can start. So, okay. See illustration number 4. This also be NCR model. So the following financial information has taken from the annual report of 2019. So balance sheet is given ma. So even though they provided this kind of information in question paper, don't panic. Just procure what you required. Just procure what you required. That's it. So okay, don't panic. Now when it come to depreciation is given, preliminary expense is given, net loss is given. Using the NCR model corporate distress production, you are required to ascertain the stage of sickness. So if it is a sickness related, you have to use NCR model only. Now see, cash profit position, net loss 58.7, add 11.6, add 28, minus 58.7 plus 11.6 plus 28. Now the answer is minus 19.10. Next, current assets total. Total current liabilities. Total current assets. Minus 1261.41 crores negative. Net worth. So equity they directly given ma. Net worth directly given, you can consider. So net worth is minus 568.94. So see net worth. Okay, preliminary expenses is there. Net worth 206.19. Fictitious is not there. They adjusted two things. Capital plus reserves and surplus. The net worth is 206.19. So each and everything is negative. If 3 parameters are negative, company fully sick. So next the concept is Altman G score. The next concept, Altman G score. Estimation of corporate distress by using Altman G score. Altman G score. Now see, this is the guy named Altman G score, not G score, Altman. He created a concept name called Altman G score. With help of this Altman G score, you can assess your company distress levels. Distress levels. Are you guys okay? For the purpose of creating Altman G score, he studied 33 failed companies, 33 non-failed companies. Out of the 33 failed companies and 33 non-failed companies, he considered 22 accounting ratios, 22 non-accounting ratio. By combining of 22 accounting and 22 non-accounting, they considered 5 ratios for explanation of the concept. So here they are expressed 3 models, model A, model B, model C. Generally the names is not there like model A, model B, model C. For student convenience purpose, I created the name of model A, model B and model C. Model A, model B and model C. Now when it come to that model A introduced in the year 1968, generally in question paper they will give with the year, not on the model A, model B, model C. So if they given 1968 model, this is a model A. If they given 1983, that is called model B. If they gives a word called revised 1983, that is called model C. That is called model C. Here students, a lot of students are confusing. If they specified no issue sir, we will follow that year, that model. But if question paper is silent, which model I need to consider? So if question paper is silent, which model I need to consider means I will give a clarity in this session. So a lot of students are using theoretical knowledge for a decision of choosing which model it is, but don't use theoretical knowledge. Use the practical knowledge only. So theoretical knowledge point of view, one concept, no, practical point of view, another problem. When it come to exams, practical point of view only you have to use. I will give a clarity what is the theoretical point of view and a practical point of view. Now this is the theoretical point of view. So this 1968 model is helpful only for publicly traded and manufacturing firms. This 1983 is helpful for private manufacturing firms. This revised 1983 model helpful for non-manufacturing and emerging markets. Non-manufacturing and emerging markets like startups. Are you guys clear? This is a theoretical way of explanation. So which model is suitable? If question is silent, you have to check company name. If it is a public limited, that time you have to use 1968. If it is a private manufacturing firm, at the time 1983. If it is a non-manufacturing like service sector or emerging market related, at the time revised 1983. So this is the way to express, this is the things expressed in theoretical. But when it come to the practicality, when it come to the exam point of view, don't use this logic. Don't use this logic. Are you guys clear? It is only for theoretical. Even though it is a private manufacturing firm, sometime they will use 1968. Even though it is a publicly traded manufacturing firm, they are using 1983. So how I decide the model means I will give clarity at the time of calculation. So this is the only for the purpose of theory, not for the purpose of judging question in exam. Are you guys clear? Now so when it come to, as per 1968 model, the Altman G-score they created 9.2x1 plus 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 0.999x5. 0.999x5. So this is 0.999x5, and basically previously it is 0.1. Previously it is a 0.1. So in few problems they are using 0.999 and 0.1, but you need to follow just 0.999 only. Why? Because in new workbook they uses 0.999. 0.999. Don't confuse here. Sir, if I wrongly used 0.1, no issue. That much of impact will not there. Next. So now, so this 1.2, 1.4, 3.3, 0.6, 0.999 or 0.999 or 4 nines, you have to keep in your mind. Either you have to by heart or you have to understand. So there is a no logical expression, logical explanation for that. So this is called code 1.2 x1, 1.4 x2, 3.3 x3, 0.6 x4, 0.444 x5. Are you guys clear? Now you have to learn what is the meaning of x1, x2, x3, x4, x5. This x1, x2, x3, x4, x5 are the ratios. I said already, out of 22 accounting ratios and 22 non-accounting ratios, so there consider only 5 ratios. These are the 5 ratios. Now see, x1 used for liquidity measure. So how to calculate liquidity measure means working capital divided by total assets. That is nothing but current assets minus current liability divided by total assets. Next, reinvestment of retained earnings is a x2. So how to calculate reinvestment of retained earnings? Retained earnings divided by total assets. Retained earnings divided by total assets. Next, profitability measure. So what next? Profitability measure. When it comes to the profitability measure, Wait a minute. Yeah. So when it comes to the profitability measure, so the calculation part is EBIT divided by total assets. When it comes to the X4, leverage, risk point of view, market value of equity and preference, equity share capital and preference divided by book value of total debt. X5, activity measurement or asset turnover ratio, sales divided by total assets. This is a way to calculate. Next, decision. If G score, Altman G score is greater than 2.99, what are the answer you calculated with the help of that equation? If your answer is greater than 2.99, that is a non-failed or non-distressed company. If your answer is less than 1.81, if your answer is less than 1.81, it is a failed or distressed zone company. Next, if the Altman G score between 1.81 and 2.99, company is on alert and is said to be a gray zone. So this is a way to calculate Altman G score 1968 model. When it comes to the 1983 model, as per theoretically says that private manufacturing firms, the calculation part is 0.717x1 plus 0.47x2 plus 3.107x3 plus 0.420x4 plus 0.998x5. So here also x1, x2, x3, x4, x5 same ratios except x4. This x4 only differentiate that 1968 model 1983 model practically, not theoretically. So in exam you have to use practical way only, don't use theoretical knowledge. Now x1 liquidity measure, working capital divided by total assets. X2 reinvestment measure, retained earnings divided by total assets. X3 profitability measure, EBIT divided by total assets. X4 leverage measure. So in 1968 market value of equity share capital and preference share capital. In 1983 book value of equity share capital and preference share capital. This only shows difference. If they provide market value information, question is silent. At that time you have to use 1968 model. If there is a no market related information, question is silent. At that time you can take a choice of 1983. Hope you guys clear. Now book value of equity share capital and preference share capital divided by book value of total debt. Here don't use theoretical knowledge, just use practical. If market values information is there, question is silent, 1968. If market information is not there, question is silent, 1983 model. Don't give a model name based on theoretically, give a name based on this X4. Next, X5 asset turnover ratio, sales divided by total assets. Here also decision will be changed. So if Altman G score is greater than 2.9, here 2.99. So this also shows difference ma. For example 1983 model, if you write this, if examiner knows that, he will remove marks. So please learn this all. So if greater than 2.9, safe zone. If G score is less than 1.23, distress zone. In between 1.23 and 2.9, gray zone. Are you okay? Next ma. When it come to Altman G score revised 1983 model. So when it come to here, only 4 ratios they consider ma. 6.56 x1 plus 3.26 x2 plus 6.72 x3 plus 1.05 x4. If there is a no x5 ratio, here only 4 ratios. If there is a only 4 ratios related information in the question, at that time only we are using 1983 model. So if there is a 5 ratios related information, then you have to decide it is a 1968 or 1983, not revised 1983. Revised 1983 only came into the picture if there is only available information for 4 ratios. Next, x1 same, x2 same, x3 same, x4 also same as previous one. Book value of equity share capital plus preference share capital divided by book value of total debt. There is a no sale discussion. In recent workbook, they framed a question based on this concept, not based on calculation point of view. Based on this theoretical point of view, they created one question. in new workbook. So before workbook, there is a no questions relating to this model C. There is only questions relating to this 1968 model and 1983 model. In new workbook, they created a question for this model C. That's why you have to give a importance for model C also. So for that question, calculation part is not needed. So they uses this theoretical way of explanation and this decision criteria. Based on this only they created a question. So if Altman G score is greater than 2.6, safe zone. If Altman G score is less than 1.1, danger zone. If in between 1.1 and 2.6, gray zone. Guys, are you okay? So if you have any doubts regarding to the concept of Altman G score, ask me now. If you have any doubts regarding to this, ask me. Everyone, do you understand? Then okay. So take a break, ma. After two, I will continue. After two, I will continue remaining portion. Good afternoon, guys. So, okay, fine. So, we already discussed the topic of Altman G score, right? Now, when it comes to the calculation part, for the purpose of knowing the Altman G score, you have to practice mandatorily these problems. Problem number 6. Problem number 6. So, when it comes to the problem number 6, Mr. H is considering investing bonds of two companies, LINC, WINC. He has recently sum of 35 lakh 50,000 from sale of market related insurance product which he invested in 10 years back. He is nearing retirement age and desire to undertake minimal risk in his investment. He is also worried about the default risk associated with this investment and desire to assess the chance of company in which he invests gaining first for the purpose of the financial assessment. He recalled his childhood friend, yes, who is currently into financial consultancy. He requested her to assess the bankruptcy risk associated with the two companies. I said already, the word bankruptcy is using for corporate distress calculation purpose. So he had some retirement money. He was ready to invest in two companies. So he don't know which company is suitable for his risk ability. That's why they're asking his friend, tell me about the which one is the least risk as per bankruptcy. Now, which extracted the annual reports and the area given below. So relevant particulars from the annual report of IE Limited and W Limited. So working capital is given, retained earnings is given, earning before interest on taxes is given, market value of equity is given. I said already, if the market value is available means it is 1968 model. 1968 model. So I am not judging based on the company name of theoretically. So I using practical. Now sales, total assets, total liabilities. Now see, calculate which companies after to invest using Altman G score and Y. So when it come to, there is a no specification of the model. So based on the information, I decided it is a 1968 model. So according to 1968 model, Altman G score equals to 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 0.999x5. So this is a Altman G score calculation formula. So x1 means you already know, liquidity measure, working capital divided by total assets. Yes, working capital values is there, total assets values is there. Next, x2, retention investment of retained earnings. Retained earnings divided by total assets. X3 profitability measure, EBIT divided by total assets. X4 leverage measure, that is nothing but market value of equity and equity share capital and preference share capital, book value of total debt. Now see, EBIT is there, retained earnings is there, total assets already there, market value of equity and preference is not there, that's why consider market value of equity is nothing but market value of equity share capital and preference share capital. Next, X5, asset turnover ratio, sales divided by total assets. Yes, sales also there, total assets also there. If you substitute the values in this equation, you will get an answer of Altman G score. Before that, you have to do a working note for x1, x2, x3, x4, x5. So these are the working notes. These are the working notes. So these are the calculation part of L limited. This is the calculation part of B limited. Now as per L limited, the Altman G-score value is 6.47. It is greater than 2.99. So if it is a greater than 2.99, so what your call? Company is a company at safe zone. So here also company at safe zone. Now here out of these two, which one is high safety? So W limited is high safety. Why? Because Altman G-score is higher. However, the slight difference in the score from the above, it's clear that ZWINC is greater than Z Lotus Limited. Thus, yes, will advise H that of both the companies are in safe as regard to bankruptcy risk. It may be stated the W is a slightly safer company to invest. That's simple. But here the point, calculation is not a big deal. The only thing is presentation. The only thing is what ma? Presentation. Let us check here. See how to present that kind of Altman G-score questions. Estimating corporate distress for L and W by using Altman G-score 1968 model. Before solving the problem, I decided it is a 1968 model based on the information. Under 1968 model, we are using 5 ratios for knowing the corporate distress of a company. Next, the 5 ratios are given below. X1 represent liquidity measure, X2 represent reinvestment of retained earnings, X3 represent profitability measure, X4 represent risk leverage, X5 represent activity measurement. Next, the formula I used 1.2 x1, 1.4 x2, 3.3 x3, 0.6 x4, 0.999 x5. Decision: if score is greater than 2.99, safe zone; if less than 1.81, red zone; between, gray zone. So after writing this entire theory content, then you have to start analysis or calculation. So you can observe how I calculated. Then after Altman G-score for L limited, Altman G-score for W limited. These are the answers. Based on that, you have to say decision. Hope you guys clear. If you write like this, you will get 7 marks pakka. Are you okay now? Then fine. Come to illustration number 7. Using Altman multiple discriminant function, calculate G-score of S & Co Limited, where the 5 accounting ratios are as follows. The comment about its financial position. So you can observe they're directly given X1, X2, X3, X4, X5. When if they provided directly, check one more time. These are X1 or X2 or X3 or X3. For example, if they shuffle these things, X1, X2, X3 order will be changed, but you have to use X1, X2, X3, X4, X5 same order only. So X1 represent liquidity measure, X2 represent reinvestment of retained earnings, X3 represent profitability measure, X4 represent leverage, X5 represent activity measure. Based on that only how to use. Now there is a no specification of the which model it is. That's why I am not using company name to find out. I am using X4. See, X4 what they given? Book value of equity to book value of total debt. So that's why it is a 1983 model. Here 5 ratios is there. That's why it is not revised 1983. It is just 1983. So when it comes to the 1983, so 0.717, 0.847, 0.107, 0.420, 0.998. So X1, X2, X3, X4, X5 same, but X4 leverage point of view, book value of equity and preference share capital divided by book value of total debt. So out of this equation, if you substitute these values, you will get Altman G-score as per 1983 model. The answer is 4.88. Here you have to say decision only based on 2.9, not 2.99. So if it is greater than 2.99, safe zone. Are you guys clear? Next, 8. Illustration number 8. From the information provided related to the company, calculate Altman G-score and comment on the financial condition of the company. So here company name itself is not there. Company name itself is not there. How can I judge based on names? Hope you guys clear. That's why I said based on information only we are judging which model it is. Okay, then fine. Yes, I observed there is a market value related information. If it is a market value 1968 model, damn sure. Now you can observe 1968 model. Now equity share capital is there. This is called book value. Preference share capital is called book value. Fixed assets, current assets, fictitious assets, current liability, debenture, general reserve, profit and loss, sale, EBT, interest on debenture, market price of equity share, market price of preference share. So the common sense we have to use, if they want the 1983 model, there is no discussion of market value. There is no discussion of market value. But even though there is a book values, why they provided market value means they need 1968 model, not 1983 model. Hope you guys clear? Then fine. So here each and everything you have to figure out. So first X1, working capital divided by total assets. Now procure this working capital. So how to get working capital? Current assets minus current liability. 1 lakh. Next, total assets. Fixed assets plus current assets. Fixed assets plus current assets. If they provides another total column, for example, total assets, at that time here this total assets includes fixed assets, current assets, fictitious assets. Fictitious assets is need not to consider for total assets calculation. You have to consider only fixed assets and current assets. Either you have to add these fixed assets and current assets is okay. If they provide a total, so out of total please remove fictitious assets. Hope you guys clear. Now fixed assets 3 lakh, current assets 2 lakh. Summing of fixed assets and current assets is known as total assets. 5 lakhs. Now with help of this 1 lakh divided by 5 lakh, you will get an answer 0.2. Next, when it comes to X2 calculation. So X2 is nothing but retained earning, reinvestment of retained earnings. Retained earnings divided by total assets. So here I already calculated total assets. I need to calculate retained earnings. So retained earnings. Yes, general reserve is a retained earning. Profit and loss account debit balance is a retained earning. The total. Yeah. So when it comes to the retained earnings, general reserve 75,000, profit and loss account credit 50,000, total 1,25,000. So out of 1,25,000, there is a fictitious assets. Basically, it is not a form part of the reserves and surpluses. So we are showing on the asset side. That's why it will impact our reserves and surpluses also. You have to remove minus 25,000. Now the retained earnings are just 1 lakh rupees. Out of that 1,25,000, fictitious assets are also included. Now the retained earnings equals to 1 lakh. So when it comes to the 1 lakh divided by 5 lakh, it also be 0.2. So don't forget to remove fictitious assets from retained earnings. Next, X3, EBIT divided by total assets. Total assets already there. Now I have to figure out EBIT. EBIT is not there, EBT is there, earning before tax. If you add interest for this, you will get EBIT. Now interest is there, 1,30,000 plus 20,000, you will get EBIT. Now EBIT equals to 1.3 lakh plus 20,000, that equals to 1.5 lakhs. Now when it comes to 1.5 lakhs divided by total assets 5 lakhs, so you will get 0.3. Next, when it comes to X4, market value of equity share capital and preference share capital divided by book value of total debt. Now market value of equity share capital equals to 2 lakh divided by 10, you will get number of shares. 1 lakh divided by 100, you will get a number of preference shares. Now that two lakh divided by 10, 20,000 into 15, that equals to 3 lakhs. 1 lakh divided by 100, 1000 into 150, 1,50,000. Now the total 4,50,000 is known as market value of equity and preference. 4,50,000 divided by book value of a total debt. Debentures 2 lakh. Debentures 2 lakhs. So after debentures, the nothing is there. Book value of total debt. So the book value of total debt equal to long-term debt plus current liability. So the debt talks about long-term debt plus short-term debt, that is nothing but current liability. Now 10% debentures is there, current liability is there, 2 lakhs plus 1 lakh, 3 lakhs. Now the answer is 2 times. The meaning of 2 times, 1 rupee is equity. So out of total assets investment 4,50,000, and that 4,50,000 rupees, 1 rupee is equity capital, remaining all are debt capital. That is the meaning of this. Now I have all x1, x2, x3, x4, x5. If you substitute in the equation, you will get an answer 4.41. So if it is a greater than 2.99, what about the decision? Safe zone, company at safe zone, company is non-bankrupt, company is not in distress. Next, come to illustration number 10. When it comes to the illustration number 10, you can observe lot of additional information is there. Why? Because you have to figure out x1 elements, x2 elements, x3 element, x4 elements, x5 elements. Now, so following the extract balance sheet of company, equity share capital, book value it is, reserves and surpluses, debenture, 10% bank loan, current liability, fixed assets, trade investments, stock, debtors, preliminary expenses. It is called fictitious asset. Now net sales is given, price earning ratio is given, dividend payout ratio is given, dividend per share is given, corporate tax rate is given. So in BV, I told lot of times there is a P ratio answer. If there is a P ratio answer, this is the clue for EPS calculation or MPS calculation. Keep this point in your mind. This is a clue for either EPS or MPS. 99% this is a clue for MPS calculation. 99% this is a clue for MPS calculation. Guys, clear? Now you can observe there is a dividend related information is there. Based on this, you can figure out EPS. You can figure out EPS. With help of that EPS and PE ratio, you can easily find out MPS. The common sense. If there is a MPS means which model it is? 1968 model undoubtedly. 1968 model undoubtedly. Now here is the point. So EBIT first working capital calculation, total assets calculation, return earning calculation, EBIT calculation, market value of equity share capital and preference share capital calculation, and the next total long-term debt calculation, and the next sales there directly, and that's it. If you know all these workings, you can easily answer. Sir, this is a old version material, that's why one number is there, but when it comes to the new materials, they use us 0.999 only. So don't confuse based on 1 and 0.999. When it come to the new edition of materials, instead of 1 they uses 0.999. Are you okay? Next ma. So which problem is problem number 10? So working capital, current assets is there, current liabilities is there, negative 1000. Total assets minus fictitious assets, that is nothing but preliminary expenses. I told already. If you take total, then remove preliminary expenses or fictitious assets. If you are taking fixed assets plus current assets, no problem. Next, retained earnings equals to that fictitious assets will impact retained earnings also. Reserves and surpluses minus this preliminary expenses written off. So you will get retained earnings. When it comes to the EBIT, so here EBIT calculation is very, very difficult. We have to figure out. So first, dividend payout ratio is nothing but DPS divided by EPS. Payout ratio is given 50%, DPS is 20. The EPS is nothing but we have to figure out with the help of X. Now the X equals to 40. EPS is there. If you do the reverse calculation, number of shares into EPS, you will get EISH. Add preference dividend, you will get PAT. Add tax, you will get PBT. Add interest, you will get EBIT. That is a calculation we have to use. You can see EPS into number of shares, 1,60,000. For that, if you add preference dividend, I think there is no preference share capital. That's why EISH is nothing but PAT. Now PAT point of view, there is a calculation part, PBT less tax, you will get PAT. Now PBT always shows 100%, tax they specified 50%. Now the pending is nothing but PAT 50%. Now the 50% is equal to 1,60,000 rupees. Now what about the 100% PBT? So 1,60,000 into 100 divided by 50, you will get PBT, profit before tax, 3,20,000. For that, if you add interest, two types of interest is there. Don't forget, two types of interest is there. What are the two types of interest, ma? One is long-term debt, another one is bank loan. If you add those two interest, you will get EBIT. Yes, EBIT also I know. Next, when it comes to market value of equity, number of shares into MPS. So how you get MPS? P ratio equals to MPS divided by EPS. P ratio is how much, ma? 10 times. 10 times. MPS I don't know, but EPS I know. 40. Now MPS equals to 400. Into number of shares, 4,000. You will get 16 lakh as a capital value. Now when come to the book value of a debt, now the book value of a debt is nothing but what, ma? This 3 lakh plus 2 lakhs of bank loan and debenture is nothing but book value of a total debt. That's about this problem. Next, problem number 12, ma. Problem number 12. When it comes to the problem number 12, see, market price related information is there. If question is silent, if there is a market price related information, I will use 1968 model, right? But here they mentioned clearly 1983 model. 1983 model. So if they mention 1983 model, obviously I follow the process question specification. That is nothing but I need to follow 1983 model. Okay, fine. 1983 model only they are also followed. As per 1983 model, X4 equals to book value of equity, share capital and preference share capital divided by book value of a debt, right? X4 as per 1983. But In this problem, you can observe what they consider. Market value of equity divided by total debt. Guys, clear? Don't confuse here. Don't confuse. Even though it is a 1983 model, comparing to book value, market values only give a picture clarity. That's why, due to that assumption, they considered, even though formula set by book value of equity and preference share capital, they consider book value of a debt. So this is a December 18 attempted question. Suggested answer also I cross checked. In suggested answer also they used this only. So this kind of problems we can't do anything. We have to blindly follow the rules given by a ICMA. So apart from this problem, remaining only same logics. But when come to here, even though you have a conceptual and subject knowledge, you have to follow sometimes guidelines provided by a ICMA. Guys, okay. For this point, this particular problem, check before and do the exam. Don't forget. Yeah, user. Hi, Nawin sir. Hi. So after that, 13, illustration number 13. Yeah, this is the question they given in workbook based on third model, revised 1983 model. Now when it come to Flamingo Airline Limited. So Flamingo Airline Limited, an international carrier, took series of loans to finance the mergers and acquisition deals. But now, observing the working capital crisis, CEO of FAL, in response to questioning at recent press conference, reported the G-score of 1.6 and assured the investors as well as stockholders that things are under control. Which zone do you place FAL? So they're asking about express about your company corporate distress level. Okay, so here calculation is not involved. As per them, they're deciding 1.6 it is a danger zone. So they're blaming 1.6 is a danger zone, but as a CEO you have to express your opinion about your company. So here you have to use theoretical knowledge, not practical knowledge. Why? Because here problems is not there, no? That's why first I will check company. So public listed companies are 1968, manufacturing companies are 1983. Other than manufacturing, that is nothing but service sector, banking, finance, all covered under revised 1983. Revised 1983. You can observe in revised 1983 there is a no X4, X5. So X5 says about sales. Number of units related information will not there in service sector. In services they are selling the service, not units. That's why X5 is not there. Are you guys clear? That's why here the suitable model is 1983 revised model. That is nothing but model C. As per revised model, less than 1.1 distress zone, greater than 2.6 safe zone, between 1.1 to 2.6 gray zone. Where you are 1.6. 1.6 is in a gray zone, not in danger zone. That is a CEO need to explain to the public. See, FAL will be placed in the gray zone. The clarification criteria into the zones of discrimination applicable to the non-manufacturing entities as per G-score. So this is the criteria: distress, gray, safe. You can also use what called red zone. Now mind it, Skyway Airlines Limited SAL is an international carrier and non-manufacturing entity. So this is not an unfair point. The discussion is completed here. This is about Altman G-score. If you have a clarity about this revision, about the Altman G-score, that is sufficient, much more enough to score 7 marks. Are you okay? So after that, you have to learn the concept name called Benisham score. Benisham score. When it comes to the Benisham score, so I said already, so if company books of accounts are manipulated or not, checking purpose only, we are using Benisham score. It's developed by Professor Macedo Benish. Purpose: detect if any company is likely manipulating earnings. Uses 8 financial ratios drawn from income statement, balance sheet and cash flow statement data. So previously we are used 5 ratios, right? Here they are using 8 ratios. Here knowing of ratios is not important for us. Just by heart the M score, by heart the G score. Are you guys okay? Next, when come to the importance, while Altman G score predict bankruptcy risk, Benish M score predicts fraud risk. Together they give a complete picture of company health. So if you want to know the company health, you have to check Altman G score as well as M score. Both is important. Now this is the score. So don't ask any shortcuts. This you have to by heart it. That's it. So you can create it with your own way, no problem. As my side, there is no clues for this. Okay. In exam, ratios you need not to calculate ma. Ratios you need not to calculate, they will give directly. They will give directly. Just placing of ratio is just sufficient. So DSRI represent day sales in receivable index, GMI gross margin index, AQI asset quality index, SGI sales growth index, DEPA depreciation index, SGI sales general admin expenses index, LVGI leverage index, TATA total accruals to total assets index. Guys, clear? This calculation is no needed to learn. Why? Because they will give direct values. Okay, it's very difficult to by heart the formulas. Why? Because it is not a regular class to explain. As well, it's not important. It is not important. So next, when it come to decision, if M score is greater than minus 2.22, company not manipulated earnings. If Benish M score greater than minus 2.22, companies manipulated the earnings. This is the decision criteria. So just you have to understand the full form or name and ratio numbers. That is much more sufficient. Now when it come to other important points, Benish M score had a 2 versions, 8 variable model, 5 variable model. So here we are used 8 variable model. So Benish M score is probabilistic, not perfect. Each and everything what we discussed, NCR, Altman, they all are also probabilistic only. Why? Because predictors, they are not actuals, they are predictors. It can correctly detect 38% to 76% of manipulation, but it also misclassifies 3.5% to 17.5% of fraud forms as a clean. So mistakes is there. It will give an accuracy of just 38 to 76%. It will not give 100% clarity. So there is a misleading negativity also there. 3.5 to 17.5% firms doing a manipulation. Even though they're doing a manipulation, they will give a clean sheet. So these are the things you have to know about the Benish M score. Now when it comes to the Benish M score problem, you can observe. So these are the values they already given. Just if you put in the equation, you will get an answer. Here is the answer, minus 2.71726. So based on that, you have to say decision. So I think this is a problem given in June 25. Not June 25, December 24. Altman G score. See. Sir, clear? So this is about problematic portion of chapter 4 ma. So another concept is there. So concept number 4, estimation of capital adequacy ratio with the help of Basel norms. With help of Basel norms. Here I will not give any clarity about the concept. Here I will directly come to the calculation part. Here we have to figure out capital adequacy ratio. The calculation part is capital divided by risk weighted assets. Here capital are classified into 2 types, tier 1 capital, tier 2 capital. Tier 1 capital and tier 2 capital. So when it come to as per rules and regulations of Basel created to each and every globalized bank, they need to maintain capital adequacy ratio minimum 8 to 4%. So this is a minimum 8% related to the case 1 check. That is nothing but tier 1 capital plus tier 2 capital divided by risk weighted assets. This is the 4% we are checking for tier 1 capital divided by risk weighted assets. Are you guys clear? Minimum. If banks are maintaining more than this, that is good. If it is less than this, it will not tolerable. That's why minimum they need to maintain 8% for calculation 1, 4% for calculation 2. Now see, here the point of importance is knowing the list of tier 1 capital, list of tier 2 capital. So this concept not there in your material, they just provided a problem. So this is the information taken from CA material, just focus on this more. So tier 1 capital means primary equity and retained earnings, tier 2 capital means general provisions and subordinate debt. So note 1, calculation of tier 1 capital. So common equity share capital, statutory reserves, other disclosed free reserves including share premium, P&L account, profit P&L profit element in balance sheet, current year as well as previous year. 2 years you can consider. Very, very important point. This is a note point. Capital reserve representing surplus arising out of sale proceeds of assets. You have to consider as a type 1 capital. Now when it comes to perpetual non-cumulative preference share capital, perpetual debt instrument without maturity. This also be a part of tier 1 capital known as additional tier 1 capital. Primary tier 1 capital, additional tier 1 capital. So these are the confusing points. So we are missing, we will add the two. Tier 2, no, it is not a tier 2. These two are specially included in tier 1 capital. Next, when it comes to the calculation of tier 2 capital. Calculation of tier 2 capital. So undisclosed reserves, revaluation reserve. So when it comes to the revaluation reserve, don't consider 100%, consider only 45%. For example, if they provide 1 lakh in the table, don't consider 1 lakh as a tier 2 capital. Out of 1 lakh, 55% discount removes, 45% only you have to consider. That means 45,000 only permissible. General provisions and loss reserves. For the general provisions and loss reserves also note point is there. Value of general provision are not exceed 1.25% of business risk weighted assets. Here risk weighted assets are classified into business or operating risk weighted assets and other than operating risk weighted assets. Here you have to check 1.25% to operating or business risk weighted assets and what are the amount they given. For example, this calculation shows 150, in table they provided 300. You have to consider 150 only. That is the note point. 1.25% of business risk weighted assets. Hybrid debt capital instrument. So perpetual cumulative preference share capital, redeemable non-cumulative preference share capital, redeemable cumulative preference share capital. These are the list is covered under hybrid debt. Next, when come to the subordinate debt, and next the subordinate debt also note point limited to 50% of tier 1 capital. But based on this, no point is there in our calculation part. But remaining all points are touched. Next, note 3, estimation of risk weighted assets. So for example, banking point of view, what are the loans they given to the public? They treat them as an assets, right? Now corporate and retail loans, the chance of risk is 100%. Now residual mortgage loans, the chance of risk is 50%. Loans to OECD members, like a G20, G10 countries type, OECD members will be there. If any bank give a loans to OECD members, the risk is 0%. Interbank loans to bank incorporated in OECD members country, the risk is 20%. Interbank loans to bank incorporated other countries, the risk is 100%. So there is a chance they can create a problem based on this concept also. Next, RBI implemented Basel 1 in the 1992 for scheduled commercial banks. So that's it. Come to the illustration number 1. Come to the illustration number 1. So common shares, tier 1 capital, statutory reserve, tier 1 capital, capital reserve, tier 1 capital, balance in P&L account at the end of the previous year. I said previous year, current year, both are eligible. Tier 1 capital. Revaluation reserve. When it comes to the revaluation reserve, it covered under Tier 2. So in revaluation reserve, don't consider 100%, consider minus discount of 15%, 55, consider only 45%. Next, provisional losses, 1.25% of business risk weighted assets are given, whichever is lower. Next, this also be debt capital instrument type 2, perpetual debt instrument type 1, very important point. Why? Because that's point I mentioned, additional tier 1 capital, perpetual debt instrument. Next, when it come to perpetual cumulative preference share capital type 2, redeemable cumulative preference share capital type 2, risk weighted assets for credit and operational risk. This is nothing but business risk. So this is called material risk. So when you are calculating 1.25%, you have to consider business risk weighted assets, not market risk weighted assets. Now when it come to tier 1 capital, 500 plus 250 plus 500, statutory reserves 250, capital reserves 300, P&L account previous year 150, perpetual debt instrument 50. If you taken it is a wrong in tier 2, the entire calculation will be wrong. So the only point confusing here, that is called additional tier 1 capital. Now the total 1250 crore rupees is known as tier 1 capital. When it come to the tier 2 capital, so reserves 100% is not eligible, 55% discount, only 45% is eligible. Why? Because they treat them 55% is a non-cash in a revaluation. So if you discounted 55%, the net 45% only will reflected as a tier 2 capital. General provisions and loss reserves. Now 1.25% of business or operating risk weighted assets are given, whichever is lower. So the business operating risk weighted assets, how much more? 12,000 into 1.25%. That is nothing but 150 crore rupees. What the given value? 300 or 150, whichever is lower ma? 150. Yes, permissible 150. Debt capital instrument fully, perpetual cumulative fully, redeemable cumulative fully. The total tier 2 capital is 540. Now, so estimating capital fund and capital adequacy ratio for MSXYZ bank, the capital adequacy ratio equals to tier 1 capital plus tier 2 capital divided by risk weighted assets totally. Now tier 1 capital 1250 crores, tier 2 550 divided by total risk weighted assets 12,000 plus 5,000 into 100, you will get percentage. Minimum they need to maintain 8%, but they are maintaining 10.53%. Good banking company. The minimum requirement is 8% only now, but they are carrying 10.53% of capital adequacy ratio. Next, you can also check, you can observe the comment. The bank capital adequacy ratio is 10.53%, which is higher than the required 8%. This means the bank has enough capital to cover possible losses and keep deposit money safe. Now there is a second check. Tier 1 capital ratio is 7.35%. The minimum is 4%, but they are maintaining 7.35% above the required. Now capital adequacy ensures bank stay solvent, follow regulations and safeguard the economy. So these are the points you have to quote. The only one model we have, the only one model as well as one problem in our material, as well in entire ICMA sources. But in CA there is a lot of problem based on this. Hope you guys clear. So this is about corporate risk management, 7 marks related stuff. Are you okay? Then fine. What next? So we are entering into gold mine. So we are entering into gold mine. So chapter 8, mergers and acquisition. So maximum 30 marks, average 25 marks, minimum 14 marks. But 7 plus 7 plus 7 is mandatory. One or two attempts they missed that flow, but in remaining all attempts they're focusing on 7A, 7B, 8B. Mergers and acquisition. Guys, clear? So I already said in ABC analysis, problems I segregated into easy, moderate, hard. So for each and every concept, you will get one problem. One easy problem, one moderate problem, one difficult problem. So the difficult problem is only 8B, 99% 8B. So the basic version and moderate problems are covered under 7A, 7B. Are you guys clear? Now, when it comes to mergers and acquisition, so I hope you already know there is a slight difference between mergers and acquisition. So when it comes to the definition point of view, both say same only, but when you went to the detailing, so there is a slight difference between merger and acquisition. And moreover, when it comes to the calculation point of view also, sometimes they use as the information like a acquisition, but in calculation part they are using word merger. Sometimes they use as a concept called merger. In solution they use as a word called acquisition. Here merger and when it comes to the calculation part, merger and acquisition words are just names, not a concepts. For theoretical only, you have to understand the difference between merger and acquisition. When it comes to the calculation point of view, there is no difference between merger and acquisition. There is no separate calculations also. There is no separate calculations also. Guys, clear? Now, Seema. Two or more firms combined. So two or more firms combined together form a new company or continue with the purchasing company name is known as merger. Two or more firms combined together to form a new company is called acquisition. The simple difference is after combining, if selling company lose their existence, that is called merger. If selling company also will continue after merger also for their own name, that is called acquisition. That's it. So selling company will lose their existence, selling company will continue with their own name. So these are the few examples we have. Are you guys clear? Next, when it comes to the types of merger is important. Types of merger. So horizontal merger, vertical merger, forward integration, backward integration, conglomerate merger. So the horizontal merger means if you combined with your similar selling good or service related companies, that is called horizontal merger. Merge between the same good service providing companies. Next, when it comes to vertical merger, if you merge between two end companies in the supply chain management. So the word supply chain management represent, you already know the concept of supply chain management. So when satisfying the customer needs by a manufacturer, he can't satisfy directly, he will create a channel, he create a chain, that is called supply chain management. OEM, original equipment manufacturer, before that they will purchase first supplier, after that supplier. First he start with supplier and supplier. Next the start point is OEM, original equipment manufacturer, then distributor, wholesaler, retailer, customer. The flow of this is known as supply chain management. The first point is OEM, original equipment manufacturer. The end point is customer. If any if you combination between the companies of manufacturer or customer, that is called vertical merger. Two end merge between the two end companies in supply chain management. Next, forward integration. If any merge between suppliers, manufacturer, distributor, retailer, wholesaler in this flow, that is called forward integration. So merge between the demand chain. If it reverse, customer, retailer, wholesaler, distributor, OEM, if there is any relation, if you combine this flow, that is called backward integration. Next, if you if you combined with unrelated companies, that is called conglomerate merger. Next, types of acquisition. Acquisitions are two types: strategic acquisition, financial acquisition. We are acquiring for the purpose of decision making purpose or money purpose. That's it. There is no more classification. The acquisition happen only because of two reasons: either strategic relating to the decision power purpose or financial money purpose only. Next, name of the person. Here purchaser is there, seller is there. Two person will involve. So purchaser name is technically acquirer, seller name is acquiree. Next, benefits of merger and acquisition. Due to merger and acquisition, we have benefits. One is synergy benefit. This is the revolving around entire concepts: expansion, tax benefits, diversification, market power and market value, goodwill, capabilities and resources, efficiency and cost. These are the benefits we have due to merger and acquisition. This is a combined benefits for merger as well as acquisition. Now the point of discussion is synergy. Now the point of discussion is what, synergy. When it comes to the synergy, so when it comes to the synergy says that individual summation is more than the combined value. Individual summation value is more than the combined value. So a lot of examples I told in EVO batch and regular batch. Here is no discussion. Go with the flow called 1 plus 1 equal to 3. So when it comes to the calculation point of view, here amalgamation is a cmainter related concept. One problem is there in our material. Next, when it comes to the merger and acquisition related problems is there. When it comes to the amalgamation, there is a two types of amalgamations is there. Amalgamation in the nature of merger, amalgamation in the nature of purchase. Are you clear? Now when it comes to there is a 5 conditions. If the 5 conditions are satisfied, that kind of merger is known as amalgamation is in the nature of merger. Out of 5 condition, if you not satisfied even one condition, that is called amalgamation in the nature of purchase. Now when it comes to the purchase consideration, so the transaction value between the purchaser and seller is known as purchase consideration. It may be cash, it may be shares, it may be assets and liability settlement. So it may be cash, it may be shares, it may be assets and liability settlement. Note, when it comes to the amalgamation point of view, this is a very important note point you have to learn. Why? Because not there in your material, it is there in CA books. So even though there is no specification related to the cash, at the time of amalgamation, you need to realize the cash from the acquiree books of accounts. So cash realization, even though question is not specified, this point is set in amalgamation in the nature of merger. Are you guys okay? So based on that, one problem is there. Problem number 1. See problem number 1. So where limited want to acquire Minda Limited, the balance sheet of Minda Limited. So here first you have to decide purchaser, seller. Purchaser, seller. Now when it comes to additional information, shareholders of M Limited will get 1 share from W Limited for every 2 shares. So the swapping with shares So the purchase consideration here, shares. If you have 2 shares, I will give 1 share. If you have a 10,000 shares, I will give only 5,000 shares. If you have a 2 lakh shares, I will give 1 lakh share. That is the meaning of that 1 share for every 2 shares. So if acquiree seller have 2 lakh shares, they will give 50%. That is 1 by 2. 1 by 2. Guys, clear? Now the external liabilities are expected to be settled 3 lakhs. Not only shares exchange, they are also settling the liability also. So 3 lakhs of debt I will repay. Next, shares of Ware Limited would be issued at the current price of 15. What are the shares I issued in the 1/2 ratio? Into 15 rupees I will give as a cash. Next, debenture holder will get 13% convertible debenture in the purchasing company for the same amount. So here debenture also I am settling, but I will converting name. Previously it is a 12% debenture. I am issuing at 13% new debentures. Debtors and inventories are expected to realize. So you can observe debts are we are repaying because of purchase. Because of purchase, the assets also realizing. So that is nothing but this is a benefit we receive due to the acquisition. So these are the payment points, these are the receipt point. Now here they not mentioned about cash, but in balance sheet cash and cash equivalent is there. Even though they not specified, you have to realize with this 1,80,000. The realization is 1,80,000 plus 20,000. Next, point 6. Ware Limited has a so this all 5 points relating to PC, purchase consideration. Now point 6. Okay, I am paying something amount to you. So why I need to pay? Because if I purchase, the benefit I received is more than my payment. At that time only I will purchase as a purchaser, right? For the purpose of calculating benefit of the selling company, they provided 6th point. W Limited has decided to operate business of M Limited, the separate division. The division like to give a cash flows after tax CFAT 3 lakh per year for 6 years. If I purchase that company, I will receive 3 lakh every year for 6 years. Now W Limited has a plan that after 6 years, the division would be damaged and disposed. Scrap also benefit. Why? Because first 6 years I will receive 3 lakhs from operations. At the 6th year I will receive 5 years. Yeah, 6 years, 3 lakhs. At the 6th year I will receive extra 1 lakh as a benefit. Now you already know, if any future benefits is there, if you are taking a present decision, you need not to use the future values. That's why you have to convert them into present value. That is the time value of money concept. Their purpose only they provided. Are you okay? So based on 6, you can easily figure out benefit received due to purchase. Up to 1, 2, 3, 4 points, you know the cost of purchase. Cost of purchase, benefit of purchase, net of is nothing but decision. See, estimation of net present value of benefit of M Limited for decision making. Net present value of a benefit minus present value of consideration, that is nothing but cost. This is called benefit of present value. This is the cost of present value, that is nothing but purchase consideration. Working note, calculation of purchase consideration. Equity shares, they have 60,000 shares. They said 1:2 ratio. For 2 shares I will give 1 share. For at rupees 15, 4,50,000 equity share settlement, 13% debenture settlement 2 lakh rupees with the name of 13%, settlement to creditors 3 lakh rupees, debtors and stock realization 1,80,000, cash and cash equivalent, even though they are not specified, we realized it as per as per amalgamation chapter 20,000. Now purchase consideration, how much I need to effectively pay to the seller means 7,50,000. 7,50,000. Next, working note 2. Calculation present value of future economic benefit. So here I am use the concept name called present value of annuity factor. Why? Because every year my amount is same, 3 lakh annuity for 6 years now. That's why I am using annuity factor. For the 6th year only I am using present value factor for 1 lakh rupees of scrap. Now see, for 6 years present value of annuity factor, for 6th year present value factor 3 lakh into 3 lakh for every year, 1 lakh for 6th year. Now the answer 12,12,260. If I purchase, I will receive benefit of 12,12,260. I need to pay cost 7,50,000. The gap is known as benefit I enjoyed because of amalgamation. 4,62,260. 62,260. Guys, clear? This is the only model we have based on the amalgamation. Based on the amalgamation. Next, ma. Calculation part under mergers and acquisition. That is a calculation part under amalgamation. When it comes to the calculation part of mergers and acquisition, this kind of models we have. Value per share calculation based on NPV, post-merger valuation, firm valuation, other method valuation. So for value per share purpose, problem number 2, based on NPV, problem number 6, workbook problem number 2 and 3. So these are the separate models we have. Next, post-merger valuation. This is a common problems what they given in the board book. And firm valuation is there based on capital structure chapter related, and other methods of valuation. That is nothing but few problems is there. That problem shows the concept of company comparable multiple methods with valuation purpose. That kind of problems covered under other method valuation. Okay, then fine. When it comes to the concept value per share calculation, so here value per share calculation, consideration based is there. Consideration in the form of cash, consideration in the form of shares, consideration in the form of cash plus shares. So when it comes to consideration in the form of cash, value of share equal to amount of cash divided by total number of shares, you will get value per share. Now if the purchase consideration in the form of shares at the time, market value of equity divided by total number of shares, you will get value per share. If it is a cash plus shares related transaction, it's a cash plus shares related transaction, cash plus market value of equity, you will get a purchase consideration divided by total number of shares, you will get a value per share. Value per share. Next, so some note points you have to understand, ma. Some note points you have to understand. First, you have to know the meaning of exchange ratio. First, you have to know the meaning of exchange ratio. So the exchange ratio is nothing but, so for selling company is a receiver, purchaser is a seller, purchaser is a sender, right? So when it comes to purchaser is a giver, seller is a receiver. Now due to the amalgamation or merger, purchaser will send some shares to seller, so seller will receive some shares from purchaser. For the find outing of that receiving or paying of shares, we are using a concept name called exchange ratio. Exchange ratio. So this exchange ratio can be calculated acquiree values divided by acquirer values. The numerator acquiree values, denominator acquirer values. Guys, clear? Now when it comes to what are the values means, here different values is there. MPS is there, EPS is there, BPS is there. So acquiree MPS divided by acquirer MPS. First logic. Acquiree EPS divided by acquirer EPS. Here acquirer means purchaser, acquiree means seller. Acquiree BPS, book value per share, divided by acquirer book value per share. Book value per share. Guys, clear? Now when it come to, this is a way to calculate exchange ratio. Based on that, problem will start. Note 2, new issue of shares. How you issue new issue? When it comes to the new issue, selling company shares into swap. So exchange ratio is also be known as swap. So number of shares in the hands of seller into swap is, exchange ratio is nothing but for one share of selling company, how many shares will receive from the purchaser. It expresses by exchange ratio. So total number of shares of acquiree into exchange ratio. Next, when it comes to the note 3. So next, after new issue, you have to figure out total number of shares after acquisition. After acquisition, what happened? Two companies as the same company, na? That's mean selling purchaser company shares will not affect, it will be same. But when come to the seller company shares, due to exchange ratio, either it will be increase or decrease. That's why we are calculating new shares. Now after acquisition, the total number of shares equals to purchaser company total shares plus new issue plus new issue is known as total number of shares after acquisition. Next, note 4. Like the note 4, market value of equity if purchase consideration in the form of cash plus shares. Very, very important point. So market value of equity if purchase consideration in the form of cash plus shares. So when you are calculating not value per share, if it is a value per share, cash plus shares divided by total number of shares. Here they are calculating market value of equity. In market value of equity, firm represent I am paying equity shares plus cash. Here I want only equity value. If you want an equity value, out of total firm value, if you remove the cash, you will get market value of equity. You will get market value of equity. So note 5, MPS calculation. So the general market value of equity divided by number of shares, you will get value per share, that is nothing but MPS. But when it come to post merger, what happen? Both company market values will be combined. That's why combined market value of equity. Due to that combination, there is some additional benefit will be arise. That additional benefit is known as a synergy. So combined market value of purchaser and seller plus synergy divided by total number of shares. What is the meaning for total number of share? Purchaser company total shares and a new issue to the selling company. The total is known as total number of shares after acquisition. That is the point here. Next, note 6, acquiry gain or purchase premium or acquisition premium. So acquiry gain or purchase premium or acquisition premium. So what is the mean for acquiry gain? Due to selling their company to whom? Purchaser. Extra, how much benefit I receive, that is called how much benefit received by a seller is called acquiry gain. Now purchase consideration we are receiving out of our market value previous of sale. So that is nothing but purchase consideration or deal price minus market value of seller company. Simple ma. The person is there na, purchaser. He quoted that I will purchase your company for 100 lakhs. Now the actual my selling company market value is 50 lakhs. The gap of 50 lakhs is a benefit to whom? Seller only na. That is called acquiry gain. So amount received from the purchaser minus my market value of company. The difference is known as acquiry gain or purchase premium. Next, note 7, acquirer gain. So purchaser what gain they had? So they had a gain of synergy, but they can't enjoy entire synergy. Out of that synergy, they need to remove acquisition premium. If any extra amount paid comparing to their market value, that will be removed from the synergy. Then you will get purchaser gain, acquirer gain. Guys, clear? So if you know this, you can easily solve problem number 2. So open problem number 2. So one of the important model we have, it's a basic version only, but this problem number 1 is medium range, what I explained. First I want to finish basic versions. Problem number 2. When it comes to A Limited is considering the acquisition of B Limited, A management estimates that the acquisition will create a synergy worth 110 million. So if they combined, A and B combined, the extra benefit they can enjoy 110 million, that is called synergy benefit. Now the following information is provided. So value of the company, that is nothing but market value 1920525. Number of shares 80 million, 35 million. Value per share 2415. Now the management of A Limited is evaluating 3 options for B Limited. Now option 1, cash offer to 17 per share. So as per purchaser they have a option 1. So what are the shares you have? For example, you have 35 million shares now. I will give into 17 rupees per share. That is nothing but 35 million into 17 rupees. you will get an answer. That is called purchase consideration. That's simple case 1. Simple case 1. Next, when it comes to the option 2, share exchange ratio 0.7 shares of A against each share of B limited. The point here saying that, so 35 million shares is there now. For the 35 million shares, the swap is 0.7. The swap is 0.7. I swapped with 0.7. So for every 1 share of selling company will receive 0.7 shares from acquirer or purchaser. That is the meaning of that 0.7. So here is a fully shares related based. It is a fully cash related payment. When it comes to the option 3, share exchange ratio 0.5 shares of A against each share base. That is nothing but swap with 0.5 plus 5 per share. Here cash plus shares is involved. Cash plus shares is involved. So when it comes to this problem, you are required to evaluate the option that will be best suit A limited and one that will best suit for B limited. Out of these 3 options, which option is the best for purchaser, which option is the best for seller is the question. Now how can I say which option is the best, which option is the worst? Means with help of acquiring and acquirer gain for 3 options. Out of 3 options, where acquiring gain is more, that is the best option for acquirer point of view. Out of 3 options, where acquiring gain is more, that is the best option for acquiring. That's simple. Are you guys clear? Let us take the solution, ma. So problem number 2. Option 1. Calculation of acquirer gain and acquiree gain if purchase consideration paid by cash. Now the purchase consideration equals to acquiree total number of shares into 17 rupees per share. The total number of shares 35 million, per share 17 rupees. The total purchase consideration 595 million. Now how to calculate acquiree gain? So purchase consideration minus my seller point of view market value. The purchase consideration 595 million, their market value 525 million. So they are receiving extra. How much? 70 million. For this option, you have to figure out acquirer gain. Acquirer gain. So generally, if there is any if there is no premium we are paying to the seller, the entire synergy I can enjoy. But due to paying of premium to seller, I can't enjoy entire synergy. That's why synergy minus acquisition premium of 70 million, the net benefit I can enjoy 40 millions only. The net benefit I can enjoy 40 millions only. Guys, okay? Next one. Option 2. Estimation of acquirer gain, acquiree gain if purchase consideration is issue of shares. Issue of shares. Now the exchange ratio 0.7, new issue 24.5 million shares, total number of shares. How you get a total number of shares, ma? I said already. Purchaser total shares plus new issue. Now purchaser shares 80 plus new issue, 80 plus new issue, 104 million shares. Now post merger market value. Post merger market value. Why? Because these are the shares I'm issue. I know, but I want value. I want value for purchase consideration. For the value, I need to multiply with MPS. Which MPS means post merger MPS. Post merger MPS. Then I will get a clarity about the purchase consideration. Now post merger market value. Acquirer after merger what happened? Acquiree combinedly join na. Purchaser value, seller value and synergy 2,555 million. Now post merger MPS, combined value divided by total number of shares. Combined value 2,555 million divided by combined shares is total number of shares is how much? Acquirer shares plus new issue 104.5 million, per share 24.45. Now the purchase consideration, new issue 24.5 million shares, per share 24.45 rupees. So the purchase consideration I am paying 599 million. Now acquiree gain. So 599 million I am paying, but their market value is 525, I am paying extra 74. That 74 is nothing but cost to premium to purchaser, benefit to seller. Next, acquirer gain. Generally, due to merger, 110 million benefit is there. Out of that, I paid extra premium 74. I can enjoy only 36 million. Any doubt up to here? Any doubt up to here? Guys, clear? Next, option 1, option 2 is not that much of difficult. Option 3 only you have to put some efforts. Estimation of acquirer gain and acquiree gain if purchase consideration through cash and shares. Now the generally purchase consideration equal to cash amount plus issue of shares. Now cash point of view, 35 million, I pay 5 rupees per share. But when it comes to the shares point of view, issue of shares into post merger MPS, into post merger MPS. That's the thing we calculated here now. Okay, now, so when it comes to cash point of view, 35 million into 5 rupees each, 175 million completed. Here new issue shares is there. Why? Because 35 million shares into swap with 0.5. That is nothing but 17.5 million shares. Now what about the per value per share? So when it comes to the value per share, combined value equals to 190, 525, 110. In this value is name called firm value. I said already, in firm value, share value will be there, cash will be there. When I'm find out in the value per share, I need not to consider cash, I need to consider only shares. That's why remove cash, then you will get a equity value. Now 2380 million divided by new issue or total number of shares 97.5 million, 24.4 per share. That is nothing but this one. Now the share value is 427.2 million, the total 602.2 million. Now acquiree gain. So generally they are 525 million value, but I paid 602.2 million, 77.2 million rupees I paid extra. When it comes to the acquirer gain, 110, I paid a premium 77.2, so 32.8 million only I can enjoy. Guys, clear? Sir, why this kind of calculation, less cash kind of calculation you not used in this case 2 or option 2 means why? Because there is a no cash and shares, there is only shares. Why you not used in this option 1 means there is a no cash and shares, there is only cash. So if there is a cash and shares only, we have to figure out value per share. That purpose, out of total value you have to remove cash. You have to remove cash. Guys, clear? Next ma. The next concept, NPV based calculations. NPV based calculation, you can fix for this attempt, you can get mandatorily this model for this December 2025, undoubtedly, mark my words. So NPV based calculation, so here they will give, the concept will not change, just names are changes, so combined value means present value of X company, that is nothing but purchaser or seller, whatever it may be. Generally X means purchaser, Y means seller. So combined value means value of purchaser, value of seller, synergy. Same only we discussed above. Now NPV of X, the NPV of X is nothing but acquirer gain. How to calculate acquirer gain? Synergy minus market value of selling company. Instead of market value, we are using NPV of selling company. Now NPV acquiree gain, so deal price minus present value or market value of acquiree. Guys, clear? So this is a way to calculate. Now illustration number 6 ma. Illustration number 6. Two firm X and Y operating in the cement industry. Both the firm are planning merge firm X worth of 200 lakhs, Y worth of 50 lakhs. This is called market value of X. This is called market value of Y. And the merging two would allow cost saving. So because of merger, there is a cost saving. How much more? 25 lakhs. So that is called synergy benefit. Cost saving also be benefit more. Here synergy benefit that happened because of combining. Assuming that Y brought X for a cash of 65 lakhs. This is called purchase consideration or deal price. Purchase consideration or deal price. Now the value of the combined firm. The value of the combined firm is nothing but what ma? Market value of purchaser, market value of seller, synergy. $275 lakhs. Next, case 2. The cost of the merged firm X. The cost of the firm merged X, that is nothing but purchase consideration. How much we are paying? 65 lakhs is the cost to the purchaser. The NPV to Y shareholders. What is the mean for NPV? Y is a acquiree, right? Acquiree gain calculation. How to calculate acquiree gain ma? Purchase consideration 65 lakh minus their market value 50 lakhs. Now the 15 lakh is known as NPV of seller. Next, NPV to X shareholder. That is nothing but acquirer gain. How to calculate this acquirer gain ma? Synergy 25 lakhs. Premium I paid 15 lakhs. 10 lakh is a synergy benefit. Net synergy benefit. For this calculation they will use 7 marks, but please show neatly. Please show neatly. Now workbook problem number 3. But this is a problem cash basis ma. This is the problem share basis. So estimating NPV of afternoon limited and evening limited if purchase consideration by issue of shares. So same as an problem number 2. If there is a shares and cash is there, you have to calculate separate things. Now you can observe NPV of E limited, NPV of A limited is the question. Now NPV of E limited means purchaser point of view, seller acquiree point of view, deal price minus present value of E limited. NPV of A limited, that is nothing but purchaser. Synergy minus NPV of E limited. So why NPV of E limited? This is nothing but premium I am paying now. Okay. Now see. So given value of firm A 487.5 lakhs, value of E 168 lakhs, synergy 100 lakhs. Now new issue, total number of shares, present value of A and E 7,555.5 lakhs, post measure MPS 78.21. So deal price equals to new issue shares into post measure MPS. That's the point we discussed in option 2 of problem number 2. So new issue shares into post measure MPS. So 247.14 lakhs. If it is a cash, there is no discussion of MPS calculation. If it is a shares, you have to figure out MPS. Why? Because new issue of shares into post measure MPS, if you multiply, then only you will get a purchase consideration. Purchase consideration. Hope you guys clear. So okay. So take a break of 30 minutes. After break, I will continue. So after break, we want to start post merger valuation kind of problems, etc. So okay guys, so value per share related problem completed, NPV based problem is completed. Now the post merger valuation related problems. So all problems are similar for this kind of method. So it is a chain linked problem. So I hope you already know the mergers and acquisition. All problems are like a similar. One or two points will be added newly. That kind of all problems covered in this post merger valuation. Okay, when it come to. So the concept of post merger valuation. These are the things you have to learn. So you already know exchange ratio. You already know exchange ratio. But sometimes they will not give a clarity regarding to how they swap. So how they swap at the time. So these are the clues we have in question paper. If they uses the word called stock on stock, at the time you have to use a MPS swap. MPS swap. So EPS BPS is not required. On stock word is given, you go with the MPS related. Share based. This is the another clue word we have. If the words share based also given in the question paper, at that time also we are using MPS proportion. Next, there is a no clues. There is a no clue. At the time also we are using MPS. So when we are using EPS and BPS, sir, it means when we are using means if question paper specifies. If question paper is not specifies, go with the MPS. Go with the MPS. That's a clue. Next, selling company expecting same profits after merger. This is one of the important point. After merger also, selling company expecting same profits. What are the profits they're enjoying before merger? That profits only they needed after merger also. At that time, you have to swap with the EPS. So this is a very important point. I will give a clarity at the time of a discussion, but keep this point in your mind. If selling company needed same profits after merger also, at the time you have to use a EPS proportion for swapping. So swap point of these are the points you have to learn for this concept of post merger valuation. Next, new issue of shares. You already know selling company shares, that is nothing but acquiring shares into exchange ratio or swap ratio. After that you have to figure out total number of shares after merger. So how we get after merger shares? Purchaser company total shares plus new issue. Next, combined earnings. The next concept is combined earnings. So combined earnings purpose is EPS calculation. When it comes to the EPS, EA/ESH divided by number of shares. Pre-merger. Post-merger, what happened? Purchaser earnings, selling earnings, and some other synergy benefit. 3 earnings will be there. That's why purchaser EA/ESH wait a minute. Okay, then fine. So when it come to purchaser EA/ESH and the seller EA/ESH, if any synergy benefit due to the combination, you have to consider as a combined earnings. That is also be known as post-merger earnings. Now, EPS. There is two types of discussion: pre-merger calculation, post-merger calculation. When it comes to the pre-merger, so individual company EA/ESH divided by individual company shares. But when come to the post-merger, earnings and shares will be affected. What is the effect means? Post-merger, two company earnings collectively known as combined earnings. You need to consider if any other synergy also there. Combined earnings means purchaser earnings plus seller earnings plus synergy divided by number of shares. Now, post-merger number of shares is nothing but purchaser number of shares plus new issue, not selling company shares, new issue shares. Why? Because due to that merger event, the shares will be impacted. The concept of impact is nothing but new issue. Next the discussion, market price per share. Same logic, pre-merger, post-merger. For market price calculation purpose, we have a lot of alternatives and formulas to figure out. But when it comes to this mergers and acquisition, maximum or 90% we are using a concept of P ratio model. So MPS equal to P ratio into EPS. But when come to the problem number 2, we are not calculated MPS based on P ratio. We calculated based on value divided by number of shares. Why? Because PE ratio is not there. But in this model of problems, they will give PE ratio. Based on that only we will calculate. So that is a way to calculate pre-merger MPS. But when come to the post-merger MPS, what happened? Post-merger MPS equals to post-merger EPS into post-merger PE ratio. But when come to here, maximum of the questions, they will not give post-merger PE ratio. They said a logic unchanged. Unchanged means pre-merger PE ratio is considered as a post-merger PE ratio. Pre-merger PE ratio considered as a post-merger PE ratio. Hope you guys clear. Now, when it come to, sir, which company PE ratio need to consider, sir? Common sense here. So, post-merger, the only living company is purchaser. That's why you have to consider purchaser company PE ratio. Now see, PE ratio of purchaser into post-merger EPS. That is a calculation you did in this 0.5 post-merger EPS. Note, if no clarity about post-merger PE ratio, if they are not specified about the unchanged or changed issue, at that time, you can take an assumption pre-merger PE ratio is nothing but post-merger PE ratio. Next, problem number 7. Point number 7. Post-merger market value or combined value. So when it comes to the post-merger value or combined value, simple. Total number of shares after merger into post-merger MPS. Number of shares into MPS is nothing but value, na? That's the thing we can do. So, but when come to the problem number 2, combined value equals to acquirer market value plus acquiree market value plus synergy we considered as a combined value after merger. But when it comes to this calculation, we are not using the sum of market values. Here we are using a concept name called total number of shares after merger into MPS. Okay. Now, percentage of ownership after merger. Percentage of ownership after merger. Acquirer point of view, acquiree point of view. The common sense applied is sufficient. So for example, total number of shares equal to 10 lakhs after merger. Out of the 10 lakh, 8 lakh is relating to purchaser, 2 lakh is relating to acquiree or seller, acquiree. Now here it is called new issue, it is called existing. If you want this ownership, 8 lakh divided by total shares into 100, 80% ownership in the hands of purchaser, 20% ownership in the hands of acquirer, acquiree. Hope you guys clear. These are the important points you have to learn for solving of the post-merger valuation problems. Post-merger valuation problems. Let us check. Problem number 4. So if you understand this problem number 4, you can easily answer 8 to 10 questions in this material. So all are same as problem number 4. Only 1 or 2 points they will add it. That's it. 1 or 2 points they will add it. Remaining all are same. Now see, when you're solving this kind of problem also, there is you can do mistake. Why you can do mistake means, I will explain. So if you do mistake here, any point 1 or point 2, it will reflect up to point number 8. If you did a mistake in either point 1 or point 2, each and everything is interlinked, na? That's why it will be totally wrong. So let us check here. Highland company is considering the acquisition of lowland company stock for stock. It means we have to swap with MPS. Acquiree MPS divided by acquirer MPS. Transaction in which lowland company would receive 90 for each share of its common stock. So this 90 rupees is known as deal price. Purchaser saying that what are the price you have, I don't know, so I will pay 90 rupees per share. 90 rupees per share. Okay. Highland company does not expect any changes in its price earning ratio multiple. The meaning pre-merger PE ratio is same as post-merger PE ratio. After merger and choose to the value of lowland company conservatively by assuming no earning growth due to synergy. They are saying that there is no synergy regarding to the earnings. No synergy in this problem. Now calculate. So some additional information is given. The following additional information is available. earnings of two companies is given, so they need not to specify which earnings it is. The common sense we need to use EASH or PAT. Why? Because if there is a no preference dividend, PAT is nothing but EASH. Number of shares is given premature, market price also given. So some requirement is there. Purchase premium. I said already, purchase premium or acquiry gain or acquisition premium, both are same names only. Deal price minus market price. Why? Because it is not a value. That's why I'm comparing with the prices. If it is a value, deal price value minus market value. Hope you guys clear. Now the deal price is 90 rupees. The market price of seller is 60 rupees. So 30 rupees is the premium we are paying. But when come to the solution, they're not expressed in rupees point of view, they expressed in times point of view. When it comes to the times point of view, acquisition premium equals to 90 divided by 60, that is nothing but 1.5 times. So you can go with the both are correct only, but they expressed in times, we expressed in rupees. Are you guys clear? Here rocket science is not involved, simple. Now when it comes to the point 2, the exchange ratio. For the exchange ratio, they provide a clue, stock on stock. Now how to calculate this, ma? Exchange ratio equals to acquiree MPS divided by acquirer MPS. Now the acquiree MPS, student will consider 60 divided by 50 is the wrong answer. Why? Because they offered a deal price of 90 rupees. It means what is the market price of seller means not 60, 90. If wrongly taken 60, the entire problem will be collapse. So what about the seller market price? 90 rupees deal price. Now swap equals to 90 divided by 50, that is nothing but 1.8 shares. Now you have to write meaning, you need to quote meaning for the 1.8. The meaning for the 1.8 is, for every 1 share of seller will receive 1.8 shares from purchaser. For example, here if you got 0.7, the meaning of 0.7 is, for every 1 share of seller will receive 0.7 shares from purchaser. Now, so what our calculation? 1.8. It means sometime purchaser will buy more than their market value companies also. At that time, purchaser need to give more number of shares comparing to the existing shares of seller. Here that is happening. For every 1 share they are paying 1.8 shares, means they are giving extra shares. Why? Because seller, if you purchase the selling company, they will get a more benefit. At that time, purchaser also give a more benefit to the selling company. So don't worry about this 1.8. You have to go with the flow. The 1.8 shares is nothing but so why I am explaining this much means, so every student thinks that always bigger companies will purchase low market value companies. That is a wrong notion. So what may be happen in the reality, we can't say. That's why here what happening means, higher valued market value selling company purchased by a purchaser. That's why purchaser issuing more number of shares. So for every 1 share of seller, it means 20,000 into 1.8. 20,000 into 1.8. It means they will receive more than existing shares of 20,000. Guys, okay. Now, point 3. The number of new issue shares issued by Highland Company. So you know how to calculate new issue. Existing shares of seller into swap. 36,000 shares. Next, post-merger EPS of the combined firm. So how to calculate post-merger EPS, ma? Combined earnings you have to figure out. Acquiree earnings plus acquirer earnings plus synergy. They said there is a no synergy. Now please calculate 2,50,000 plus 72,500. 3,22,500 rupees divided by total number of shares. How to calculate total number of shares? Acquirer, purchaser, shares plus new issue. Acquirer shares, please. 1,10,000. New issue 36,000. Total 1,46,000 shares. Now combined earnings we already calculated 3,32,500 divided with 1,46,000 shares of total after merger. Now post merger EPS combined companies is 2.21 rupees. 2.21 rupees. Guys, clear? Now when it come to pre-merger EPS of the Highland company, they especially mentioning about pre-merger EPS Highland. That's why I have to check only Highland. So EPS of pre-merger, EISH 2,50,000, number of shares 1,10,000. 2.27 pre-merger of just Highland. Next, pre-merger PE ratio. So PE ratio equals to MPS divided by EPS. So this is about Highland only. Now the MPS of Highland 50. EPS just now we calculated 2.27. So 50 divided by 2.27, PE ratio is 22 times. 22 times. Next, post merger share price. Now simple, post merger MPS equals to PE ratio into post merger EPS. Just now PE ratio calculated. Sir, that PE ratio is a pre-merger na? Yes, I said, no, not me. The question paper said PE ratio is unchanged. So PE ratio is how much? 22 times into post merger EPS 2.21. Now the post merger MPS 48.6 rupees. Next, when it come to post merger share price completed, post merger equity ownership distribution. Total 1,46,000 shares is there. Out of that, 1,10,000 shares is relating to purchaser, 36,000 shares is relating to what ma? Seller. Now 1,10,000 divided by 1,46,000 into 100, you will get a 75.34%. Out of 100%, purchaser holds 75.34%. Now the pending is 24.66%. That is nothing but acquiree share. So this is about problem ma. 7 marks problem. Basic problem. Are you okay? Now, when it come to the next, problem number 6. Completed. Problem number 7. When it comes to the problem number 7, Raghava Limited is intending to acquire a Saurav Limited by merger, and the following information are available in respect of both the companies. EISH is given, number of shares is given, MPS is given. What is the present EPS? The word present EPS means pre-merger. So when it comes to the pre-merger EPS, EISH divided by number of shares. EISH divided by number of shares. You will get EPS 5.3. If the proposed merger takes place, what would be the new earning per share for Raghav Limited? Assume the merger take place by exchange of equity shares and the exchange ratio is based on current market price. Now swap with the market price. They are asking about post merger EPS. You have to follow steps. First you have to figure out swap, MPS divided by MPS. Next, new issue, total number of shares, combined earnings divided by total number of shares, you will get EPS. That's it. Now when it comes to point 3, let us check here. Exchange ratio 14 divided by 21. 2/3. For every 3 shares, they will give 2 shares. Next, new issue 30,000 into 2/3. You can take a 2/3 point value or 2/3. You will get same answer. The new issue equals to 20,000 shares. Total number of shares 50,000 existing of purchaser plus 20,000 new issue, 70,000 shares. Combined earnings 2,50,000, 90,000. There is a no synergy. That's why 2,50,000 plus 90 is the combined earnings. 3,40,000. The EPS equals to 3,40,000 divided by total number of shares 70,000. You will get 4.86 rupees. That about case 2. Now when it come to case 3, what should be the exchange ratio if Saurav Limited want to ensure the same earnings to the members before the merger took place? I said this point already. So if selling company need a same earnings before merger and after merger, at that time you have to swap with EPS. When it comes to EPS, we already calculated. So acquirer 5, acquiree 3. Now 3 divided by 5 you will get swap. Acquiree EPS divided by acquirer EPS. 0.6 into number of shares of 30,000. You will get new issue. 0.6 into 30,000, 18,000 shares. Total number of shares. Purchaser 50,000, new issue 18, 68,000 shares. Combined earnings 2,50,000, 90,000 divided by new issue total number of shares. Total number of shares 68,000. You will get 5 rupees. 5 rupees. You can check. Previously it is 3 rupees. Now it is 5 rupees per share. How I get the same earnings? Sir, per share 5 rupees, sir. How many shares you have? New issue shares is you have na 18,000 rupees into per share 5 rupees. Post merger earnings are 90,000. Check with your pre-merger earnings. 90,000. Guys, clear? Don't compare with the per share point of view. Compare with the total point of view. Hope you guys clear. The point you have to understand, if selling company needed same earnings before merger and after merger, you have to swap with EPS. This is a proof. Next, problem number 7 completed. 9. Problem number 9. Anurag Limited is considering the acquisition of B Limited with stock swap with MPS. So relevant financial information is given below. Present earnings EASH is given. Number of shares is given. EPS also given. PE ratio also given. With help of these two, you can easily figure out pre-merger MPS. Yes or no? No? What is the logic behind the MPS calculation with help of P ratio? P ratio into EPS is nothing but MPS. Okay, then fine. So what is the market price of each company? I said na. So 1.875 into 10, 1.25 into 5. 18.75, 6.25. Next, what is the market capitalization of each company? So you already figure out that 18.75 market price, 6.25 market price into number of shares. You will get market capitalization. So 18.75 into 4 lakh shares, 6.25 into 2 lakh shares. 75 lakhs, 12.5 lakhs. If the PE of Anurag Limited changes to 7.5, previously the PE ratio is 10 times. Now the PE ratio changed to 7.5. What is the market price of the Anurag Limited? Yes, if PE ratio changes, market value also changes. Now the PE ratio 7.5 into EPS 1.875. You will get a new market price. 7.5 into 1.875, 14.0625. So what is the market price? Yes, completed. Does market value of fund dog limited changes? Yes. If PE ratio changes, MPS changes. If MPS changes, market value also changes. Now what is the new market price? 14.0625 into 4 lakh shares. The new market value is 56.25 lakhs. What would be the exchange ratio based on market price? Take a revised price of the Anurag. Just they are asking about swap. Swap as per revised price. The revised price is 14.0625. Seller not changes na. 6.25 divided by 14 point something, 14.0625. Now the swap equals to 0.44. What is the meaning for 0.44? For every one share of seller will receive 0.44 shares from purchaser. Next, problem number 13. So these all are basic version problems only. So after completion of the basic version, I start the problems of medium range. The following information is provided related to the acquiring from Sun Limited and the target from the Moon Limited. So Sun Limited, Moon Limited is there. Profit after tax. If there is a no preference dividend, PAT is nothing but EAESH. Number of shares is there. PE ratio is there. So with help of this PAT and number of shares, I can easily figure out pre-merger EPS. With help of this PE ratio and EPS, I can easily figure out MPS. What MPS? Pre-merger MPS. Now, what is the swap ratio based on current market price? Current market price is not there. So that is the purpose I calculated this two. So EPS 2000 divided by 100, 4000 divided by 1000. So the EPS before acquisition 10, 4. 10 into 10, 100, 4 into 5, 20. That are the market prices. So case 1 we can solve now. 20 divided by 100. That is nothing but 0.2 or 1 is to 5. 0.2 or 1 is to 5. Guys, clear? Now what is the meaning of 0.2? For every one share of seller will receive 0.2 shares from purchaser. What is the EPS of Sun Limited after acquisition? So if you want to find out EPS of after acquisition, you have to follow. So swap into seller shares, new shares will come, plus purchaser shares, total shares will come, combined earnings divided by total shares, EPS will come. Now the new issue, how many shares they have? 1000 lakh shares into swap 0.2. The new issue is 200. Purchaser existing 200. 200 plus 200, 400 is the new shares. New shares equal to 400. Now when it comes to the combined earnings, 2000, 4000. Synergy is not there, 6000. 6000 divided by 400, you will get post merger or post acquisition EPS 15 rupees. Case 3. What is the expected market price per share if Sun Limited after acquisition, assuming PE ratio of Sun Limited adversely affected by 10%? The word adversely affected by 10% means previously it is 10, now it reduced by 10% of 10. That is nothing but 9 times is the new PE ratio. Same as above problem. If PE ratio changes, determine the market value of merged firm. So when it come to 9 times market price, EPS 15 and into 9 times you will get MPS 135. 135 into new shares 400 lakh shares. So 54,000 lakhs is the market value of the firm. Now calculate the gain or loss for shareholders of the two independent companies after acquisition. Gain or loss of shareholder. If the vote gives a shareholder, you have to say decision based on market value. You have to say based on market value. Next. Now see here, post-merger market value 54 lakh. Out of that, remove the pre-merger market values. 20,000, 20,000. The total 40,000. If you remove 14,000 lakhs is the benefit due to that acquisition. Out of that 14 lakhs, we have to share. Now, post-merger value. Post-merger value. So 135 rupees into 200 lakh shares, that is 27 lakh rupees. So they already have pre-merger value of 20,000. They can enjoy benefit of 7,000 out of 14,000. Next, when it comes to the Moon Limited, so one share 135 rupees into 200, 27,000, pre-merger value 20,000, the gain to shareholder is 7,000. The gain to shareholder is 7,000. Guys, clear? Next, this is a point called gain to shareholder. So some other points will be there. I will explain clearly. So gain to shareholder point of view, this is a way to calculate. So out of total gain, what are the share enjoyed by a purchaser and seller is known as gain to shareholder. Next, the problem number it is 13. Open 16. Problem number 16. When it comes to the problem number 16, X Limited is considering a takeover of Y Limited. The particulars of the two companies are given below. EAT is there, number of shares is there, EPS is there, PE ratio is there. With help of this PE ratio and EPS, I can easily figure out market value per share. What is the market value of each company before merger? So with help of this, I can figure out MPS into number of shares. I will get market value. See, market price 25 into number of shares, you will get market value 200 lakhs, 50 lakhs. Point 2. Assume that the management of X Limited estimates that shareholders of Y Limited will accept an offer of 1 share of X Limited for 4 shares. They are swapping with 1 divided by 4. If there is a no synergic effects, what is the market value of post-merger X Limited? Are the shareholders of X Limited better off they were before the merger? So very, very important. If they use the word called better or worse off, you have to change the calculation part. It is gain to the shareholders is a different way. If they ask the word called better or worst off, you have to show better or worst off situation. Next, due to synergic effect, the management of X Limited estimates that the earnings will be increased by 20%. Without synergy, what is the better or worse off? With synergy, what is the better or worse off is the question. Now, first, you have to figure out post-merger market value. Now, post-merger effect of X Limited. Post-merger earnings. Purchaser and seller, there is no synergy as per case 2. 30 lakhs. Divided by new issue. Existing shares plus selling company shares into swap. 12,50,000 shares. So post-merger earnings divided by total number of shares, you will get EPS. Into PE ratio, you will get market price. Into total number of shares, you will get market value. So total number of shares is nothing but 12,50,000. So 300 lakh is the post-merger market value. Now, gain from the merger. Gain post-merger market value of the firm less pre-merger market values. 50 lakh is the gain. 50 lakh is the gain. When it comes to the apportionment of gain between the shareholders. Apportionment of gain between the shareholders. Now the post-merger values are 240 lakhs. This is 60 lakhs. This is 60 lakhs. Why this 60 lakhs means new issue shares plus post-merger EPS. Post-merger EPS. Here they multiplied with swap. Yes or no? No. If they are not multiplied with swap, if they consider total number of shares, here you have to multiply with swap. Why? Because total market price can't reflect. Now when it come to, if you remove, you will get the benefits. Now post-merger earnings. As per case 3, due to synergy, 20% of combined earnings are increases. Combined earnings already 30 lakhs. Now 20% increase means 120%, 36 lakhs. Total number of shares will not affect. divided by 12,50,000, you will get new EPS 2.88, P ratio not affected into 10, you will get a new market price 28.8. There is a shareholders will be better off. Why? Because the previous market price of purchaser is 20 rupees. Due to merger or acquisition, the market price is 28.80. Now the shareholders of purchaser happy only, na? Before merger 20 rupees, now it is 28.8 rupees. The market value is increased. The market value is increased. Okay. Next, problem number 16 completed. Self practice problem number 2. Now this is the other model. So this is a concept of company comparable multiple methods with mergers and acquisition combo. Very clear? Now see, Yasmin has been assigned to evaluate the acquisition price of HBR Limited. The information about HBR Limited is given below. Price 11 rupees, shares 50 million, debt 500 million, revenue 700 million, EBITDA 125 million, EPS 0.9. Yasmin has assessed some recent comparable transactions. So with the help of these comparable transactions, you will get a average base. So average base into comparable, you will get values. Are you guys clear? Now you are required to assess the acquisition price and its a premium against the current market price using the average values. You can observe it is about HBR Limited. This all are merger or acquisition between some other companies. With help of that some other company information, if you do a valuation, that is called company comparable multiple method. That is called company comparable multiple method. Now first you have to figure out with the averages. Now the average into required. The average into required. So EBITDA multiple, sales multiple, EPS multiple. Earnings multiple is nothing but EPS multiple. Now reported value. What about the EBITDA? 1.5 into average EBITDA ratio. EBITDA to enterprise value ratio. Next, EPS is a per value point of view only. You need not to multiply anything. Next, when it comes to the debt, revenue, sales into enterprise value to sales ratio, average. Value multiplier. Now if you multiply with P ratio, EPS into P ratio, you will get MPS directly. But when it comes to here, if you multiply with reported value and value multiplier, you will get enterprise value. The enterprise value includes equity plus debt. I want only equity portion, then remove the debt portion. You will get equity value. Now divided with the number of shares, you will get value per share 17.5, 13.2, 15.8. 17.5, 13.2, 15.8. Hope you guys clear. So why you are not reduces debt value here, why you are not calculated here means, why? Because I got EPS into P ratio multiple. You can multiply the two, you will get direct answer of MPS. But here if you take a reported value and value multiplier, the outcome name is called enterprise value, and that enterprise value equity is there, debt is there. If you remove debt, you will get equity value divided with the number of shares, you will get value per share. Guys, clear? That is the acquisition prices. They're also asking premium. So generally the market price is 11 rupees, the deal price is 17.5. the extra you paying apart from the 11 is known as a premium or over current price. So the existing price is 11 rupees, but we paid 13.2. The gap between 13.2 and 11 is known as premium. They expressed in percentage. That's it. Next, illustration number 5. Yeah. Herfindahl-Hursman index, HHI. So this is the concept is not that much of important, but just to understand calculation part also. So Herfindahl-Hertzman index says that sometimes fraudulent mergers and acquisition will be happen in the market for occupying the market control. For the purpose only they created this law, Herfindahl-Hertzman index. Guys, clear? So Herfindahl-Hertzman index is considered to be the better measure of assessing a market concentration. The HHI measures sums the square of each company's market share based on sales in the industry. Not only it is easy to calculate and interpret, but the Herfindahl-Hertzman index is also more effective at modeling market concentration. So how much market is affected purpose only we are using this Herfindahl-Hertzman index. Now point, students should recall the sales of the firm divided by total sales equal to market share. Now how they calculated this value means, for example, A, B, C, D, three companies is there. It sells 10,000, it sells 5,000, it sells 1,000, it sells 500. Now the total equals to 10, 15, 16, 16,500. If you want a market share of A, 10,000 divided by 16,500. 5,000 divided by 16,500, you will get individual market share from the industry. Are you guys clear? Now for example here take a 60% or something. Now the square of these values, summation of square of these values is known as Herfindahl-Hertzman index. Market share into square, sum of all square values is known as Herfindahl-Hertzman index. After getting the square, the Herfindahl-Hertzman is less than 1,000 points, suggests that market is not concentrated. So if Hertzman HHI between the 100 to 1800 suggests that market is moderately changed, there is nothing but concentrated. Now above 1800 points, market is highly concentrated. If it is a highly concentrated, in Indian Competition Commission of India regulates the industry concentration to protect consumers' interest. You have to investigate on that. Now they already calculated market share. Sales divided by total sales, sales divided by total sales, they already calculated. Now what would be the Herfindahl-Hertzman index for the industry? If you square off this, square sum of all square is summation is known as summation of square of all values is known as Herfindahl-Hertzman index. Now see, if the summation is 1580 or 1587.5, but there is a no merger and acquisition is happen, we can't say the word called moderately concentrated, but if as per theoretical, if it is in between the 1,000 to 800 moderately concentrated, we have to express. Guys, okay? Next one. When it comes to the point 2, what would be the Herfindahl-Hertzman index or the industry of C limited and D limited merged together? If C and D is merged together, what happened? Let us check. If C and D merge together, 15 plus 10, the market share is 25% in the hands of C and D limited. A, B, C and D, E, F, G, H. So 25%, 20%, 25%, 10%, 7.5%, 7.5%, 5%. Square. You will get the values. Sum of all 1887.5. So if it is a more than 1800 points, it's a highly concentrated. Government need to investigate on each and every 100 points. That's a case C. Assuming that the government will trigger antitrust issue of the change of Herfindahl-Hertzman index is over 100, would there be antitrust issue? Yes, there is antitrust issue. You have to investigate and tell me. Are you guys clear na? Any doubt on this ma? Then okay. When it come to workbook problem number 3 completed, next come to the moderate problems ma. Illustration number 1 completed. Illustration number 3 ma. Illustration number 3. So you can take a choice of this question ma. Why? Because last attempt only they asked ma. So this is the question based on value of the firm. So with help of my notes and this question you can easily understand. So but you can leave it. Why? Because this question already covered in last attempt question paper. Next, illustration number 10. Illustration number 10. When it comes to the illustration number 10, Abhishek Limited is considering takeover of Because Limited and Chitra Limited. So generally up to now we discussed between the two companies. Now the first time they provided it between the three companies A, B, C. A, B, C. So A is ready to acquire B Limited and C Limited. Two selling companies, one purchasing company. So the financial data for the three companies are as follows. So equity shares capital 10 rupees each, 450 crore, 180 crore, 90 crore. This is the capital rupees ma. If you divided with 10, you will get number of shares. Don't consider these are the number of shares. They are capital. Now earnings EAESH. Market price of share. Current market price. Guys clear? Now P ratio. MPS divided by EPS. 60 divided by 90. 37 divided by 18. MPS divided by EPS, you will get P ratio. Okay. Then when it comes to the question 2, earning per share of A Limited after the acquisition of B Limited and Chitra Limited separately, will you recommend the measure of either both of the companies? Justify your answer. Simple. I will calculate merge with B Limited, merge with C Limited. If my market price increases, if merge with B, so I will go with the B merger. If my market price increases due to merge with C, I will consider C also. If two market prices are increases, I will consider both also. If one market price is increased and if you merge with C, market price decreases, means I will not merge with C, I will merge with B. This kind of question it is. Now presentation is very important for this problem number 10. Yeah, you can observe. Given information, so I written properly. Then case calculation of PE ratio. Market price per share divided by earning per share. I calculated PE ratio for all three companies. 30 times, 37 times, 23 times. Next, case 2. Calculation of post-merger EPS and MPS. Now when it come to, here is a discussion, A Limited versus B, A Limited versus C Limited. So all calculation we are doing under A point of view only, but on the consideration of B Limited and C Limited. Now exchange ratio, acquiree MPS divided by acquirer MPS individually. So this is B point of view calculation, this is C point of view calculation. Then new issue of shares, B point of view and C point of view. Total number of shares, B point of view and C point of view. Next, combined earnings, B point of view, C point of view. Post-merger EPS. When it comes to the post merger EPS, B point of view, C point of view, and post merger MPS, B point of view, C point of view. Now this is the 2 rupees of A limited pre-merger. If I merge with B limited, my EPS is 1.93. My earnings what happen ma decreases. If I merge with C limited, previously I am enjoying 2 rupees per share. Now it is 2.08. Yes, merge with C limited is the best option. Let us compare with the market prices point of view also. When it comes to the market prices point of view, before merger, my market price is 60 rupees. Due to merge with B, my market price decreases to 57.9. If I merge with C, my market price increases to 62.4. That's why in market price point of view also, C is the best option. I merge with C, I'm not merge with B. Hope you guys clear. Any doubt on this question ma? Next problem number, which one it is? 10. Problem number 12. Ma 11 also important ma, but easy. Check once it. Problem number 12. When it come to the problem number 12 ma, when it come to the problem number 12, read the question. Company X is contemplating the purchase of company Y. Company X has a 3 lakh shares having the market price of 30. Now for this kind of problems, first write down the information in box format. If you have a information in box format, then you can easily answer this kind of questions. Okay. Now, so 3 lakh shares of X having a market price of 30 per share, while company have a 2 lakh shares selling price at 20, current market price and current number of shares. Now the EPS 4 rupees 2.5 for company X and Y respectively. The management of both the companies are discussing 2 alternative proposals for each of the shares as indicated below. They have a 2 alternatives like problem number 2, but under post merger valuation point of view. Now option 1, in proportion to the relative earning per share of 2 companies. They're saying that in proportion to relative earnings per share, that is nothing but with help of EPS swap. With help of EPS swap. Second point, with help of specific swap. The specific swap is nothing but 0.5 shares. So case A, EPS point of view, what are the consequences? Case B, I am specifying swap is 0.5. What are the specification? What are the calculations? Now see the requirement. Calculate the EPS after merger under 2 alternatives. Okay. Case 2, to show the impact of EPS for the shareholders of 2 companies under both the alternatives. Point 2 is very, very important. Let us check. Problem number 12. Now see, number of shares 3 lakhs, 2 lakhs, MPS 3020, EPS 42.25. With help of that MPS and EPS, without their asking, the requirement is there about the PE ratio. That's why I calculated MPS divided by EPS 7.5 times and 8.89 times. Next, with help of the above information only, I can calculate EISH. How to calculate EISH? EPS into number of shares. EPS is there, number of shares is there. These are the hidden calculation I calculate for the further process. Now case 1. Calculation of post merger EPS under 2 alternatives. Case A, swap based on EPS. EPS is there 2.25 divided by 4, 0.5625. For every 1 share of Y limited will receive 0.5625 shares from X limited. You have to quote everywhere of this point regarding to the swap. Now new issue, 2 lakh shares, 2 lakh shares into swap of 0.5625. Now you will get 1,12,500 new issue shares. Now you have to figure out total number of shares after merger. Existing shares and new issue shares 4,12,500. Combined earnings. That is the purpose I pre-calculated this EISH. 12 lakh plus 4,50,000, there is no synergy, 16,50,000. Now combined earnings divided by total number of shares, you will get 4 per share. This is alternative A point of view. You have to calculate alternative B. So swap they already specified. That's when new issue. 1 lakh shares. Total number of shares. Existing 3 lakh of purchaser. New issue 1 lakh. 4 lakh shares. Combined earnings 12 lakh plus 4 lakh 50,000. 16 lakh 50,000. Now EPS equals to 4.125. This is about case 1. When it comes to the case 2, statement showing impact on EPS for both the firms under both the alternatives. Now case A, post merger EPS about X limited, Y limited, 4 rupees, here 2.25. Sir, post merger EPS 4 rupees na for X limited. Why you are consider 2.25 for Y limited means? Here is a point you have to understand. Y limited ownership is not 100%, but X limited has a total 100 ownership. That's why post merger entire EPS will reflected in X books of accounts. When it comes to the Y point of view, what are the share they received from the X limited, that much of values only they can enjoy. It means for out of 4 rupees they don't have a right of 100%, they have a right of swap. They have a right of swap. That means the post merger EPS equal to 2.25. Very, very important calculation. Now pre-merger EPS. Pre-merger EPS 4 rupees 2.25. Now what about the benefits? Nothing. No impact on EPS under alternative 1. When it comes to the alternative 2, post merger EPS 4.125. 4.125 into swap only. That is nothing but 2.0625. Pre-merger EPS 4 rupees 2.25. Now impact. So previously 4 rupees, due to merger 4.125. 0.125 market value increased to X limited. When it comes to the Y limited, previously 2.25. Due to merger, the selling price share values will be fell to 2.0625, the negative impact of 0.1875. So positive impact for X limited EPS increases comparing to the previous. Negative impact on Y limited EPS decreases comparing to the pre-merger. So this also be one of the important model we have, so don't neglect here. So EPS means, post merger EPS can't enjoyed by total by a seller. So they can enjoy only by a swap. They can only enjoy it by swap. Problem number 12 completed. Problem number 14. Problem number 14. In December 23 attempt. You can observe all questions are asked, each and every question is covered in exam paper only, but some are maximum of the questions covered in old syllabus. Out of old syllabus only they are asking in new syllabus questions. Don't worry. So if you have knowledge up to now regarding to the mergers and acquisition, trust me, you can easily handle 2 questions. 2 questions you can easily handle. Now let us check about the illustration number 14. So following information provided related to the acquiring of company X and the target company Y. So number of shares, market capitalization, PE ratio, reserves and surplus, promoter holding. So here is a problem. I will give an overview for this problem number 14. Nothing is there. 2 new points is given. Generally, we will calculate swap based on either MPS, based on either EPS, based on either BPS, book value per share. But in this problem, they provided EPS swap, MPS swap, BPS swap. Sir, out of 3 swaps, which swap I have to consider means, for that they provided weights. So weighted swap here you have to consider EPS swap into EPS weight, MPS swap into MPS weight, BPS swap into BPS weight. You will get answer na. Sum of all is known as weighted swap. That's one point. The second point is promoter holding. So here one thing you have to learn, there is a promoter holding under free float. So what are the shares available in the share market, that is called free float. What are the shares holded by a true owner is known as promoter holding. So put a 5 star, maybe it's a, you can put in the guest list. So all are guest list only. This is more guest list, important guest list. Okay, then fine. So first calculate the swap ratio and also calculate the promoter holding percentage after acquisition. Important solving point. Important solving point. What's the problem number? It is 14, right? Now see problem number 14. So given information, number of shares is there, equity share capital, book value is there, reserves and surplus is there. Book value of equity you will get equity share capital plus reserves and surplus. Why? Because I want book value per share for swap purpose. They're not given in the book question paper directly. That's why I am figure outing. Book value of equity, market capitalization is there. MPS we can easily figure out market capitalization divided by number of shares, and PE ratio is there. With help of MPS and PE ratio we can figure out EPS. Generally what we calculate MPS with help of PE ratio and EPS. Now with help of PE ratio and MPS we are figure outing EPS and book value per share also. Book value of capital or net worth divided by number of shares. Now MPS is there, EPS is there, BPS is there. Now promoter holdings also they given. Calculation of swap ratio, promoter holding percentage after acquisition. Now swap equals to EPS point of view, BPS point of view, MPS point of view, multiply with weights. Then you will get summation of all these 2.5 shares. This is called weighted swap. So for every one share of seller will receive 2.5 shares from purchaser. Next, percentage of promoter holding, number of promoters after acquisition divided by total number of shares after acquisition. Now when it comes to working note, number of shares held by a promoter after acquisition, X limited promoter will not affect, but Y limited promoter will affect. Why? Because they are receiving swap now. That's why purchaser promoter shares 4,75,000, but when come to the Y limited 5 lakh shares into swap of 2.5. Now the total promoter holding number of holded promoter after acquisition 17,25,000 shares. Are you guys clear? Now out of total number of shares 17,25,000 shares are promoter holding, remaining are free float. It means now I have to figure out total number of shares. How to calculate total number of shares? Existing purchaser shares plus new issue. Now what about the existing shares? 10 lakh shares. New issue equals to, they have already 7,50,000, swap 2.5, you will get new issue. The total 28,75,000. In this 28,75,000 shares, 17,25,000 shares are promoter holding. The gap is known as free float. That is a way to calculate promoter holding. Total 28,75,000. Out of that 17,25,000 shares are promoter. The percentage of stake handed by promoters are 60%. 60%. Next. What is the EPS of X limited after acquisition of Y limited? So simple, combined earnings divided by total number of shares. So combined earnings divided by total number of shares, 6.96. What is the expected market price per share and market capitalization? PE ratio into post merger EPS, you will get MPS into number of shares, you will get market capitalization. So they are saying that PE ratio will not change. EPS into number of shares. Oh, combined earnings calculation. So earnings of individual not given, but clues are there. EPS is there, number of shares is there. So this is a calculation for combined earnings. Calculation of market price per share, market capitalization, MPS, post merger EPS into PE ratio, 69.6 into total number of shares, 28,75,000. So 200 2001 lakhs. Now calculate the free float market capitalization. Simple. 100%, 60% promoter holding means 40% is free float. 40% into market capitalization, you will get free float value also. So free float, total holding minus promoter holding 40%. So total market value into 40%, you will get a free float value. The pending is known as 60% is known as promoter holding value, 40% is known as free float value. This is also one of the important problem. Illustration number 19. Illustration number 19. Illustration number 19. ST Limited and BE Limited are in the same industry. The former is a negotiation for acquisition of the latter. Important information about the two companies as per the latest financial statements. Okay, ST Limited, BE Limited information is given. Now see here another important model we have. Purchaser point of view one plan is there, seller point of view another plan is there. Now for the two plans you have to calculate these 5 points. Purchaser point of view one plan, seller point of view another plan. This kind of model we already seen, but that is a point of purchaser only. That is a point purchaser only. On that purchaser only they provided two offers. What offer you want you can check. That is a condition imposed for seller. But when come to here, counter offer. Purchaser gives one offer. Now counter offer given by a seller. Now see, ST Limited plans to offer a price of BE Limited business as a whole which will be 7 times EBITDA reduced by outstanding debt. So purchaser says that I will pay your EBITDA into 7 times. Your EBITDA into 7 times. 7 times of EBITDA and reduce debt. And I will remove your debt also. The remaining amount is known as purchase consideration to be discharged by own shares at a market price. So for that amount I will issue shares with the market price of 220 rupees. It's a purchaser offer. If purchaser is giving offer means he will give his market price only. Yes or no ma? Now next, BE Limited planning to seek in a 1 share of ST Limited for every 2 shares in BE Limited. But seller says that I don't want that offer. I want every 1 share from I want 1 share for every my 2 shares. That's a counter offer given by a seller. Based on the market price, tax rate of the two companies may be assumed 30%. Calculate and show the following under both alternatives, ST Limited offer and BE Limited offer. Now consideration payable need to calculate, number of shares to be issued by ST Limited calculate, EPS of ST Limited after acquisition, expected market price of ST Limited after acquisition, state briefly the advantage of ST Limited from the acquisition. This is the questions we have to answer. Let us check this. Problem number 18. As per ST plan, consideration EBITDA into 7 times minus debt. So EBITDA into 7 times, your EBITDA, seller company EBITDA 115.71, I will pay 7 times. Out of that I will remove debt. So 569.97 lakhs I will give. This is called purchase consideration. For this I will issue shares. The new issue equals to 569.97. I issue at my market price. That is nothing but divided by 220. You will get number of shares. Case 2 answer. post merger EPS, combined earnings divided by total number of shares. The combined earnings are 300, total number of shares, existing shares plus new issue shares 14.59077. You will get 20.56 per share. But the point is how you get this 300 of combined earnings is important. Why? Because you have to do working note. They are not given EA, ESH or PAT. They provided EBITDA. Out of EBITDA, you have to remove depreciation and amortization expenses, taxes, interest. All, if you remove that, you will get EA, ESH. For that, you have to do working note. EBITDA minus interest. Why? Because there is no depreciation and amortization expenses. That's why you can directly remove interest. You will get EBITDA less tax. You will get EBITDA. There is some other information. That's why it is known as earning after tax and depreciation and amortization expenses, EAT or EISH. So 240 plus 60, 300. That is the way this 300 is came. Hope you guys clear. Next, total number of shares. ST limited shares plus new issue. That is nothing but 14.59077. After acquisition MPS. So EPS we already calculated, and P ratio clue is there. MPS and EPS 11 times. So 10.56 into 11 times, you will get 226.16 per share. Next, when it come to as per PE plan, consideration equals to new issue into market price. This expressed as swap 1:2 ratio. 6 lakh shares 1:2 ratio at market price of purchaser. Purchase consideration equal to 660 lakhs. Now new issue. So shares into swap 3 lakh shares. Post merger EPS. Here post merger EPS we already calculated working note for combined earnings 300 divided by 15 lakh shares 20 per share. Post merger MPS. So EPS 20 rupees and P ratio 11 times. So that is about illustration number 18. That is about illustration number 18. So that's about mergers and acquisition, guys. So that's about mergers and acquisition. Okay, within 2 days I will upload part 2. On that part 2 I will cover remaining portion of valuation of assets and liability, methods and approaches, and fundamentals, some theory. So up to now, please finish this entire marathon. Up to now you need to finish this entire marathon. So within 2 days I will upload remaining parts. Okay, thank you. Bye. I hope this video will helpful to you. Thank you.